it's like lately, just in my own time, I've been studying
investments,
time series analysis and stuff like crazy because I'm determined I'm gonna, and also like just technical analysis and stuff because like we don't.
So when you log in,
in our firm we never like my coworkers don't even know what like RSI is because they like don't do forecasting.
Exactly.
Like that's not a thing.
Yeah, because you at the end of the day you're just measuring performance.
Yeah.
Right. You're not.
We're analyzing. It's like we do all sorts of statistics and stuff, but like in terms of actual like patterns and breakout theories and stuff like that, they don't do any of that. So I've been having to study that on my own. Because I'm trying to build out in my mind how the psychology of these investors work. So as I'm building my machine learning system, I can actually like implement it with the some of this technical analysis strategy in mind.
Damn. So I don't have a software developer background. I can sell software, I'll tell you that. But it's where was I going with this? Like it's just like you have a very quant background for sure. And in here I leverage a lot of like more. I understand quant stuff, but I'm like pretty disciplined to follow my rules. So I'm like I would say it's like rules-based discretion. What a lot of people would say. Well, we could definitely talk about. I wanted to show you this earlier because you mentioned like, where's the activity in Silicon Valley? This is at every mixer. I think when you were there, I pitched this basically, right?
Probably.
I pitched this at every mixer because it's just like, this is probably like the coolest trade or capitalization opportunity in the markets that I've seen or in this report. And the reason why you're from Oregon, you keep coming back to Silicon Valley to do your networking or find your community, your hobby group, right? So this is the chart that I use. The amount of money invested into software in 2018 was 45 billion, right? In terms of the world. VCs in terms of the world, right? Of that 45 billion, 38 was in the United States. Right? So the chunk of it's in the US, and then Europe's about 5 billion, Canada's 1 billion, and then Oceania is like 450 million. Right? So the cool part is 38 billion, of that 38, 20 billion's in the Bay Area. So half of the world's venture capital is here in the Bay Area.
I just love being I love just driving down the road and seeing the billboards here and stuff. It's just this is my place.
I feel that way too, and I can't leave, man. So yeah.
Like I've never lived in a city before, so it's like a little intimidating, but like but it's just the fact that everybody here just like gigs like I do. That's kind of cool.
That's why I don't want to move away. It's just the area to be, right? This one's that one was a dollar value. This one's a volume chart, so it shows you the volume of transactions in terms of like handshakes, like people going out there and saying, "Hey, we're gonna make a deal. Hey, we're gonna make a deal." There's all the volume you see in Silicon Valley. So because I understand that it's like options trading. Have you trade options before?
I've done analysis of options.
So
I don't personally do options trading.
Yeah, so I guess the better example of like why is volume important is penny stocks at least. So penny stocks is like a smaller segment, like a micro cap segment where there's not a lot of volume, so you can't be a big player and go in there and bet big. So you have to kind of play that 1% of volume, because if you start playing 10% of volume, like if volume's 1,000, you're playing 100, you're gonna start moving the charts. So I think that in terms of Silicon Valley, if all the venture capital transactions are here in Silicon Valley, at least the majority, or at least all of it's here, then there should be a high probability of me running into a transaction out there when I go network or whichever. So I do see it left and right. But yeah, this is why I normally pitch at every mixer over and over and over until someone gets interested and comes to my investment club or whichever. Anyways, guys, it's 10 o'clock. How you guys been? It's November, right?
Already.
Yeah. This is the month I was born, man. Yeah. So I'm thankful for 138 lectures today. Thankful for you guys coming in, for your physical presence and time and attention and all that. I know there's not a lot of people yet. Normally the students come in late. Just like every class for some reason. Usually like 10:15 the room gets a little full, maybe, or even 10:30, I don't know. They think that I normally like to go over the markets, but what I wanted to go over first today was actually the collapse of the Roman Empire, which is some interesting stuff, but I'll wait for them. I have a video as well.
Aaron, I sent you this link already, but I figure like this is something it's super interesting that should be shared. And then we're going to go over some stocks. We're going to look at Fitbit's acquisition analysis. Why is Google acquiring Fitbit? Decently margined business, tech, healthcare, the personal IoT play, I guess. Then we're going to look at a lot of tech stocks. We're going to talk about interest rates as well, lower interest rates. So what does that mean? Back to the printing of money. So printing of money, they're talking about all the way until Q2 of 2020. So I'm looking bullish until 2020. It's just every money manager doesn't fight the Feds, at least in the last decade. So we've been trying to fight the Fed in a way because it's like, well, maybe I'll do some long volatility, but that doesn't work right now because they really want to keep the system up. For those of you who are new, the logic behind that is like, the reason why we're going into study of like the empires of the past, like the Ming Dynasty or Zimbabwe or Roman empires, because every empire they devalued the currency base and it led to financial crisis. It's just something that's inevitable. So we're going to study one use case to kind of see what's happening today. So there is money devaluation, and the way we're protecting ourselves in this investment club is investing into gold or gold miners like Eldorado Gold, which really performed well. Yeah, that's what we're going to talk about today, I guess. New faces. I know you can't. You normally go to the mixers, right?
Yeah.
Is this your first time at the investment club? 2-3 times.
Third or fourth time.
Okay.
Yeah.
Ed, your last name is Sum?
Yeah.
Man, I didn't know that. You messaged me this morning. I had no idea it was you.
I thought it was cancel sometime. Once in a while you cancel.
Yeah. And what was your name again? Cody. Well, nice to see you again. And you're new, I'm guessing, first time?
Yeah, this is my first time. I'm Vivek.
Okay. Hey, nice to meet you, man. Yeah, welcome. You're new as well. What was your name?
Yeah, Nasir. Nasir.
Nasil. Okay, nice to meet you guys. I normally don't like go and say, hey, like, what's your name, but it's kind of a small group right now, so I feel pretty good too. Like the energy is great this morning. Every day you got some good energy. You should appreciate it. Anything new with you guys, or just chit chatting before I get started, I guess. Cricket. Okay. Let me fix these screens real quick. I like to.
So, personal question: what did you dress up as on Halloween?
I was Mr. Chow from Hangover. I was, and I didn't want to do it, but I end up getting convinced. I do have a picture if you guys want to see. What did you dress up as?
Scarecrow.
Okay. Please don't judge me, okay? But I was Mr. Chow. If you guys don't know Mr. Chow from Hangover, this is me right here. Okay, all right, that's enough. Did you guys have a good Halloween? Typically, Halloween I don't really go out. It's usually my cousin's birthday, so we just celebrated that. Yeah. Let me check the people online too. There are people online that I don't show them enough love these days. Let's see, 16 people online. People online, welcome. We'll get started in a bit. I'm just chit-chatting with the guys in here before more people come in. But if you guys have any questions on stocks that we want to look at, let me know. We could look at some stocks before I get started, or answer any questions that you feel is a mystery in the world of finance, because that's how I learn too. If you ask me a question I don't know, so that'll be like, oh, that's a loose end for me. So if you have a question or
Tesla, like it's one you're talking about?
we talked about Tesla last week, but you want to talk about it real quick today?
What about Apple?
Apple? Okay. So for the most part, Apple and Microsoft are like the two heavyweights in the markets, meaning they have a lot of weight on the index, the S&P 500 or Dow Jones. When money printing happens, which it started it was announced October 11, so it's already in full play right now. They're printing money. So when they're printing money, they're taking money away from you because the income you work for becomes less valuable. And that's how every empire of the past fell down. So we're going to look at Roman Empire today. But talking about Apple, Apple's like a blue chip, the biggest company as of right now in the world. And usually it's number 2, but now it's number 1. So if you want to look at the biggest company in the world by market cap, we could go over to the scan over here and then do market cap. All the companies that's publicly traded, USA only. Well, there are some other ones, but I don't have like subscription to like all the companies. Right, so this is 7,000 companies. For those of you who don't know, Apple's number 1 right now, valued at $1.15 trillion in market capitalization. That means we're in an investment club next to the biggest company in the world. Isn't that cool or what?
Yeah.
Yeah, that's pretty cool. Biggest company in the world, most likely the highest quality human capital. That might be a super bias because we're here in Silicon Valley, but I look at corporations these days in different dimensions, right? I'll look at Apple in terms of like their market opportunity, right? They have the mobile devices and then some of the tablets and laptops and all that. But other dimensions I look at would be like management. Okay, market opportunity, which is product and services, management. What new market opportunities are they pursuing? So the four services that they're coming up with, like media, financial services, and was it Apple TV and all that? How are they penetrating new growth? If this was a software company, I'll also look at the VC investors, but it's already very mature. I don't look at that. What else do I look at? I look at the human capital, especially. These days I look at human capital because the more we talk about money in here, the more I get disconnected from money. Like you think it's the chase for money, but it's actually not the chase for money. Because once you escalate past the enterprise level, you get to the sovereign level, which is the government level, who could print as much money as they want. They don't care about they don't care about money. They could print money. What they care about is human capital, in the aggregate, and how you get that human capital to, get whatever objective that they're trying to achieve. So, for example, Roman Empire, they wanted their human capital to go to war, right? Fight for your lives. For silver that's been debased. So that's happening to us today. But it's in such a, like the financial literacy is so vague and blurred that you don't know it today. And because no one lives more than 100 years old, you don't study this, economic history because you're not more than 100 years old. You don't see the patterns of devaluation. Most people don't have a finance degree or talk about finance. Or understand the concept of money. So yeah, I think all these things are very important. So, sorry, we digress a lot, but going back to your comment on Apple, I think it's going to go up because it's the biggest company in the world, strong cash position, and they're printing more money. When you print more money, solid blue chip assets like Apple will just go up. So that's what they're doing. Now, can anyone answer the question as to like why are they printing money? Why do you print money when stock market's at all-time highs? Why are you printing money? Why are you lowering interest rates? Why are you expanding balance sheets? That's what they're doing right now. When markets are all-time highs. We only lower interest rates when there's like a recession, right?
They're actually preventing from recession.
Yeah, they see a recession. They're acting like though there's a recession, but the markets aren't showing it. So what does that mean for S&P 500 and all that? Well, I think it could go up. I think they're going to delay it for like another. I mean, we're getting close, okay? Like the volatility is so crazy in the last 2 years in the stock market. If you really look at it, and I think we're getting close, but they're actually delaying it. It's like the dude on steroids is like, he's wearing out, he's jogging that mile, whatever he's wearing out. Give me some more steroids, and then like we're trying to inject the guy, but he's just like it's not working, right? But we might just get maybe another 2 quarters. I don't know. They say Q2 2020 is when they'll stop, right? But if they don't stop, what does that mean? Yeah, right. So, and is injecting more money a good thing or a bad thing?
It's bad.
It's bad for who?
US. But you're putting inflation into the market, right?
Yeah. So it's good for asset holders.
Yeah.
Great for investors. That's why investors are wealthy, typically, if you're an all-star investor. But if you're like 99% who don't have financial literacy, don't know anything about finance, you're getting robbed. It's a hidden tax, purely a hidden tax, man. And it's just insane because when I'm like October 31st, I'm with my family. I'm looking at them, right? It's like the kids knock on the door and go trick or treat, but it's also a birthday party, and then all the family members are like taking pictures of the kids that are trick or treating. I'm thinking like, man, all these people, this is my family. They're hardworking, putting in the sweat equity to make their money, but they don't understand that it's getting devalued at the macro level. So it's like, what are we doing? But we are at the tightest situation ever, right? It's just the end of the game, I feel, and this is what their governments are biased to do. Well, like this is their choice. They have an ultimatum, right? We print money, devalue the population's, efforts, or we go extinct. It's super binary. There's no other choice.
Yeah, but if you're saying that it's going to happen anyway, supposedly in 1 to 2 quarters, then what's the big difference of doing it now versus in 6 months?
I think in 6 months, so the way it works is like, when you find an investment position, right? For me, when I'm building out a BlackBerry, Cloudera, or FireEye big position, right, to capitalize, it's moving sideways still. What am I preparing? I'm preparing for like the next few quarters that I think is going to go parabolic. So what are they doing? They're just doing the same thing, investment position, right?
But the problem is, let's say if we really get into the R world.
Into the what world?
The R word.
The R word.
Yeah. So the situation comes, so Fed is already spending all the bullets that they have right now.
Yeah.
What are they going to do then?
Yeah. So now we have to really find our answer. I found in the more higher global macro arena. So this is where you have to escalate past Apple, right? The corporation cloud, and get into the sovereign cloud. So I'll come to a conclusion, like seeing all these activities of like China and Russia. These guys are sovereign level chess players, right? Because what I do here as the enterprise guy, I'm more of like a corporation chess player. Meaning like, oh, FireEye is trying to, or Cisco's trying to acquire FireEye. How do I play this? This is all enterprise level. You have to go to the sovereign level to kind of understand it. So what's happening is that the government's balance sheet is expanding like this, biggest it's ever been, right? And it's a two-sided game. There's another entity called the Federal Reserve. Their assets are expanded because when they buy assets, right? This one, the government issues IOUs, so their liabilities expand. Over here gets the assets, so their assets get inflated, right? So that's how we analyze the situation. Are Fed balance sheets assets expanding or not? So if it's expanded, both have expanded to unprecedented levels, and interest rates are basically zero almost. And so what happens when you have something that's so big? It's a bubble basically. So I'm seeing Russia and China doing all these deals with like, the one we talked about last week was Putin going to Saudi Arabia for the first time in 12 years, right? Negotiating some deals. He signed like 14 contracts or whatever, 14 deals. So those to me are acting as needles to pop this big bubble that the US has. The reason why the US is able to print so much money is because we have a monopoly position, right? The dollar is the throne. And so because we have the throne position, we could print money as much as possible, and all the other countries can't really do anything. Because when fear hits the world, everyone runs to the dollar. So there is a risk of a dollar spike, which is bad on gold, right? So knowing that, right, China, right now there's a huge inflection point because I'm seeing the economics going to emerging markets, China, even the big investment guys, they all see emerging markets as like the greatest opportunity right now with gold, right? So we also look at Ray Dalio's portfolio. We open up his portfolio and you can see that this guy is super exposed to emerging markets. So if I go over here, in case you guys know who Ray Dalio is?
Yeah.
If you don't, he's the guy who supposedly runs the biggest hedge fund in the world at more than 100 billion. So we can look at his current portfolio and see his exposures, right? You could do it by weight. I like to do it by shares, but I'll show you weight. His biggest weight right now is, this is Ray Dalio right here, and it's 15% of his portfolio is in emerging markets, right? And I would argue it's more than 15. It's actually like 25%. I'm sorry, 25 plus another 10. So if you want to add up his exposure to emerging markets, you also have to add up Brazil. So 8, let's just say that's 20 plus another 15. Let's just say 30%. His 30% of your net worth is exposed to emerging markets. This guy's managing a lot of money. What does that tell you? So he's extremely bullish on emerging markets. So the way I'm seeing is that China and Russia are acting as the needle in this huge unprecedented sovereign debt, because we could print as much money as we like, and we could get away with it because everyone operates on top of the dollar as the Salesforce operating system of the world, or the Oracle operating system of the world, or the Amazon e-commerce operating system of the world, or AWS operating system of the world, or Uber operating system platform of the world. You see what I'm saying? We dominate the platform game, but this platform game has decay features to it, meaning there's too much debt in the government, and the rest of the world doesn't like this. So they've been investing pretty hard in terms of like the relationships at the sovereign level, right? Russia going to, Putin going to Saudi Arabia, developing that relationship. So it kind of tells you like they're trying to pop this, meaning they're trying to make us realize our debt. So that's that scary part right there. If the government's realized our debt, I say our debt, because who's the government? We're the government, right? Aren't we the government at the end of the day? We're all the government, right? Supposedly. So we're going to realize our debt, man. And so if you ask me, if we have a long-term chart of taxes are going up. This is like it's like a guaranteed trade. If I could get some financial engineer in the markets today, like Goldman Sachs or whatever, and I say engineer a bet for me to go long taxes, cost of taxes, I'd go along that all day, because the taxes are going up. they're in the stickiest of the stickiest situation. So what the heck are we gonna do? So that's why I see that. Okay, it's an aging sovereign game, and gold seems to be a strong position. You know, fundamentals are all-star fundamentals are there. It's beaten down. A lot of them are, you know, most of them are trading at below book value. So these are undervalued Warren Buffett favorites. But Warren Buffett is still sitting at, you know, record level of, was he king cash right now, right? He has the most cash in the world in terms of like, is it more than an entity?
$180 billion.
180, I thought it was 120. Oh damn. So yeah, that's where we're at right now. That cash could be devalued pretty quickly. I guess what we're talking about right now is just basically the concept of like a currency collapse. And if a currency collapse, I realized that, you know, in analyzing the patterns of like history, I didn't do the whole 5,000 year analysis. I probably did more than a couple hundred years maybe, but most people don't even go more than 100 years, right, of analysis. And you see every empire, the same thing happens to them. It's just the nature of the game. So, you know, in ancient China, they had the Ming Dynasty. I read a little bit about that, how they converted away from like the silver coins into paper currency so that they can manipulate the paper currency. Roman Empire was the whole, the silver coins. And by the end, it was only like, we're going to talk about today, less than like 5% of silver in a copper coin, right? It was just a really thinly covered piece of copper and silver, right? So, yeah, I think the economics are getting tight and it's affecting all demographic levels, meaning the younger people can't purchase real assets, but the older people can't exit their real assets either, to liquidate for retirement, to purchase a cheaper real asset with sustaining the standard of living. So I think if this game continues, we just have to get used to this tight economics, high competition, but you gotta play it smart, I feel, to kind of, you know, get somewhere in this world, in this current economic weather. You have a question?
I was going to ask if you think, so, you know, if we got this, you know, market right now that's being sustained by, you know, actions from like the Fed and stuff, do you think that they could keep this trend on life support through the next election?
Yeah, so...
And do you think that's possibly a goal, is to basically push it off as long as they can?
Yeah. So I'm not into politics, right? I prefer to be the enterprise guy, not the sovereign guy, because when you start talking about politics, I can see that it gets to a very messy conversation and level of discussion. I've seen some big money managers say that if the next president is more democratic, we're going to have a recession. When I think about that, it's like, it kind of makes sense because like you want someone who could really control the capital right now, the expenses, because just treat the government entity as the biggest entity in the world, one of the biggest entities in the world, and it's like how you treat your personal finances. You know yourself when you accumulate too much credit card debt, you need to nerf that down, you need to bring it down, right, to be more in a sustainable position. So if we have someone that's going to be spending a lot more, then that might, on top of like unprecedented levels of debt, it doesn't know how to play the sovereign level chess game, then I'd be a little concerned. Right, you gotta have someone pretty strong coming in playing that sovereign level chess game, meaning like, okay, we see this strategic move with China and Putin or whatever. Are we gonna let it happen? I feel like that if you ask me, like, you know, political policy, that I think that'd be priority number one for me, playing the sovereign game. Domestic's pretty low for me, because I think I mean from a financial manager risk analysis and then your CIPM, what would you say about the debt? It's just. Yeah, it's insane. So,
but every country that has been pushed into the arena of not spending money, okay, or not borrowing and investing money, like I think Greece was forced to do that, right? I forget the word they were called, like, you know, spend less.
Yeah.
And they resulted in no growth with them.
Yep. I keep forgetting this guy's name, Echter's Pyramid. So this is what we talked about in the last few sessions. This is what the world of asset classes look like out there, right? So everyone thinks that, I have a better pyramid picture than this one. I'm just too lazy to go pull up one of the documents that we talked about it. But if you look at the world of assets out there, meaning assets are anything that we acquire that has real social value, meaning we all agree it has some value, right? The biggest chunk is derivatives, right? So futures, options, forward contracts, swaps, whatever. Non-monetary commodities, so nothing like S&P futures or whatever. More like real assets, real commodities like coffee beans and stuff. And then real estate, private businesses, which you could invest in, right? You could buy gold and stuff like that. Well, gold's not really counted here, it's actually down here. And then over here you have like corporate bonds. Corporations could issue fixed income as well, and you could buy fixed income, right? Governments could issue state bonds or whatever, city bonds. And then listed stocks right here. You see the size of that? The derivative markets are huge. And then you go down, you have government bonds, treasury bills, which are perceived as really safe. But what is it safe when you got China and Russia trying to pop that bubble? Right. So a lot of big time money managers don't perceive these bonds as that safe right now. And then money, right? People think like, oh, go to cash, but then they're manipulating it down in value. So for thousands of years, when every empire fell, humans just naturally went to gold. So that's why I'm bullish on gold. That's the idea behind it, really. And yeah, it's really a game of Monopoly. You just gotta know what cycle you're in and how you're gonna play it. At least that's sort of my conclusion after teaching for a while and what I learned.
So when the bubble pops, do you think the derivatives are at the highest risk of loss?
Well, okay, so it could be. I mean, it depends on which side you're on. Because if you're like long volatility, dude, you'd be like, I'm long volatility derivatives. I'm in the best environment right now. So it's all, when you're betting, it's always about which side you're on. So yeah, it might shrink because most people are long side biased versus short side biased. But yeah, I think the game's very inflated, right? Because think about this. These are derivative contracts, right? They derive their value from, let's say, listed stocks and from real estate. Real estate valuations are higher. Derivative valuations are even higher, right? I mean, my Apple call, let's say Apple's at all-time highs. The calls I buy or calls I write is the biggest ever. So,
Do we have like a chart which shows like the gold as a store of value, how its relative strength has been decreasing over centuries?
like real value?
Like
Like
as
a real
gold
value
as
chart?
a store of value was much more valuable maybe 300 years back, but now as a store of value, is it really that significant, or as a proportion of the overall sum total of this, what is the relative portion of gold going down?
I want to say I have a chart for you, but I don't think I understand like what we're trying to look for enough to show you a chart. But we could follow. I could follow up and send you a text.
Like I'm trying to understand how much of gold as a hedge is still valid in today's times.
Yeah.
I mean,
So-
gold
so-
could
so-
pretty much buy like the same amount of gold back in the Roman times could buy the same basket of goods as, nowadays almost, like same amount of food and stuff. So it's a pretty good store of value. Like,
Yeah, so-
over the centuries.
Store of value is a very interesting phenomenon. I realize that if we create another USA 2.0 or whatever, we have to have that concept of store of value. And store of value changes over time. Because I didn't know that, before I studied more than 100 years of history, I didn't know that we had several global reserve currencies in our history. It wasn't always the dollar. But if you came in with just 50 years of knowledge, you only thought it was a dollar, right? And I also didn't know that we are in our 4th Federal Reserve entity. Did you guys know that? I didn't know that. I had no idea. I learned that this week.
What do you mean by that?
Meaning that the governments took down the Federal Reserve before
Oh.
and put them back in.
You mean the US
Because they're wait, what, say again?
US government.
Yeah. So I didn't read too much on it, but I look it up. I didn't know that this wasn't our first one, right? And the reason why they took it down, they said along the lines of like the engine for speculation. It really is the engine for speculation. They are the engine that, creates more money out of thin air. So yeah, that's something we have to understand. And if you don't pay attention, like I said, I always say the economics below your feet are moving. Well, when you understand money engineering, dynamics of money, dude, they're really moving. Before I start, I'm going to draw that concept that I came up with recently that I really like, because I think it's very valuable for people. So 1% of the population, right, have 99% of the assets, basically, right? And typically these guys want the game to keep going, because if the game doesn't go, then these assets don't really have value. And then 99% of the population over here have about 1% of the assets, I would say, because most people don't understand finance, don't go and people are just, when I go out there and see it, there are more consumers than producers, right? So more people chasing the concept of consuming in life than people producing a lifestyle. But this is what's happening, right? This is my favorite concept as of right now that I'm drawing. This line right here, the distance between the 1% and the 99% is the wealth inequality line. And so and then this is the 99% of the assets, right? And then this is 1% of the assets that are being held down here. So when we start printing money, what happens to the assets? They go up in value. So this line right here that you see is expanding, and it's getting further, right? So these guys are getting richer when they print money because they're the guys who hold the assets.
Is this counting in factoring in inflation? Because I mean,
This is inflation essentially. When we print money, right? The 99% of the assets increase in value, right? If let's say if it's inflation because you're thinking of CPI, right? Or like the basket of our consumer goods, right? But if the assets appreciate, if Apple appreciates, what happens to real estate? It goes up, right? Because it's like, oh, I get to work next to Apple, the biggest company in the world. So real estate goes up. So if real estate goes up, then what happens? Rent goes up, right? And rent's going up, then you got to earn more. Corporations have to pay out more. If they pay out more, well, now businesses are making more money, right? So they have to raise their coffee prices and all that. So yeah, it's trickle down economics. So what I'm arguing is that the line right here is actually expanding as they do that. So the 1% are right here, and the 99 are right here, right? So this wealth inequality line expanded, and so you're gonna see stuff like social conflict, right? This is gonna be more common moving forward. You're gonna see more millennials being geeking out to minimalism, right? Because they can't really afford anything. So this whole new massive social culture that's originating, it's super interesting to me. And then I think we're gonna see what they call generational warfare. Does that make sense? Meaning like there's going to be more like conflict among like different age groups.
you mean like how the younger generation is more prone for socialism versus old generation capitalism?
I'm all about. So I learning all this. I've been telling people like I'm more. I think financial capitalism's dying because of the money printing, right? And with technology emerging like crazy or evolving like crazy every day, I'm more towards social capitalism now than ever. Meaning like I want my assets to be in my network. Meaning like it's my reputation, what I put out into this community, because that's something that the governments can't tax. I mean, yes, you could buy real estate, right? That's a real asset that appreciates in value, but they could tax that. So I've came to the conclusion, seeing all these money managers as well as these new emerging fields like YouTube influencers or Instagram influencers. I know I'm close to an Instagram influencer. She has more than 120,000 followers, and I realize like the power of this. Social capitalism is becoming very real. Do you guys understand what I mean by social capitalism? Meaning like the bigger your network, that's becoming an asset. And so because I understand that Silicon Valley has the finest set of human capital ever, this is like the human capital to really appreciate, go for, and work together to build the next unicorn, right? If I wanted to build a unicorn that's worth $1 billion, it's going to be here. And there was an interesting post that by one of my favorite VCs, SaaStr, Jason Lemkin. So I follow this guy a lot. He did an analysis recently, October 21st. So in like the last 10 days, 80% of public SaaS companies are in the SF Bay area. So I'm primarily a software investor, right? Because software has the best margins right now. They're the most efficient business that exists out there, but it's the most questionable because it's very emerging. But he did an analysis. 80%, everything from Adobe, PayPal, Salesforce, ServiceNow, Workday, Shopify, Atlassian. Well, isn't Atlassian in Australia? Square, Viva. Okay, I'm sorry. Yeah, so Atlassian's out, Shopify's out. But 80% of these companies that I like are here in Silicon Valley. Isn't that exciting? Man, my hair's standing up. Like it pumps me up because I live here. I'm physically here. And when I run these mixers, it's like, oh, you're from Marketo, which means you're from Adobe. Oh, you're from Netflix. Oh, you're from Intel. Oh, you're from NVIDIA. And it's like you learn so much stuff, right? And the knowledge that people bounce back to me up here, for example, what Raj says is like very valuable. I don't know. I said it last time, but Raj might get mad at me. I don't know if I should say it again.
So if we take that concept, the 80% in this area,
Yeah.
and with
So valuations are going to be crazy. Like real estate, I'm not trying to. I'm not trying to provoke a transaction. Okay, like I'm a realtor, but I don't do that stuff. Like this is from objectively speaking.
Mm-hmm.
If they keep printing money, and we have the best companies, the most emerging, the most frontier, all clustered in Silicon Valley, this land, you're not just going to compete with other high human capital consumers who want to buy a home. You're going to compete with corporations like Apple and Google. This land is going to become very rare because, okay, I'm gonna mention what Raj said, okay, and he's probably gonna hate me, but so Raj used to work at NVIDIA. He went over to Samsung, and over in Samsung, he's in Texas. He said that and he might be on. He could say that I'm wrong, but this is what I remember him saying. Raj, yeah. So he's saying that they're sacking the CPU team and hiring a GPU team. So it's like shorting Intel or AMD. Historical CPU and going long NVIDIA GPU, right? Because that's like the AI future or whatever. But the issue is that they sacked the Texas CPU team and they're hiring a Silicon Valley GPU team. Why not hire a GPU team in Texas? The human capital's not there. Because human capital doesn't move that way. So when I'm out there networking, I have a unique view because I'm hearing so many people complain to me saying, "Okay, it's too expensive here. I'm going to move to Texas. I'm going to move to Oregon. I'm going to move to Washington, wherever." But I meet the sophisticated guys from Singapore and Saudi Arabia, VCs from Saudi Arabia or whatever. Those are examples I always use. They're saying, "Okay, where can I find a place here?"
So you're saying as part
This
of
place
that,
is becoming more quality in human capital. That's what I'm saying.
So when the crash occurs, because the human capital is here, taking your argument to a conclusion,
Yeah.
then the crash in this area should be less severe than in other areas.
Oh, for sure.
Okay.
For sure it's going to be less severe, but you can't play this game thinking everything goes to the moon. Nothing ever goes to the moon.
Right.
Right? So even as good as Apple looks like or some software stock like Slack or whatever, it doesn't go to the moon right away. It's empires, true, real, intrinsic empires or organizations or entity that have real value is made over time. I can't lecture like I do today when I started yesterday. All right, this is my 138th lecture. So all that, all the unique views of Silicon Valley, all the networking, all the talking, and reinforcing this stuff, like it's who I am today. I can't do it in one day. So when you go find a stock out there, find the ones who put in the sweat equity, the ones who really built out the community over time. That's why Salesforce is like Salesforce and Amazon. I'm not surprised like those guys are some of the richest guys in the world because they just put all their energy and effort into building something that they love. Yeah. Yeah. But in this world, there's so much, I talk about people being a product of society, right? I think everyone's a product of society. Meaning the moment we're born, everything's marketed to us, right? Like, this diaper, this college education, this fashion lifestyle. I'm a product of society. I'm a product of like the investor society because I hang out with those guys in terms of like mental presence, right? I might not know them physically like Ray Dalio, but I meet him intellectually from like, looking at the economics of things. So for example, like Kyle Bass, the guy who's shorting Hong Kong right now, right? I never met him, but I met him intellectually. And the way he just described why Hong Kong's so inflated in value, it's just simply amazing. I'll tell you real quick, just in a nutshell, why real estate in Hong Kong went up so high. Hong Kong is located near China, right? And they pegged their currency to the dollar, right? Around, I think 2008 or whatever. I have to read his report again. This is what he said. So they pegged it to the dollar 2008. Recession came, they devalued the dollar, right? That's good for real assets. Hong Kong didn't have a recession, but they're pegged to the dollar. So they just got a boost of monetary policy from the US because they pegged themselves to the dollar. At the same time, they're close to China, who printed money like never before. That money trickled out. It dripped out of China, went to Hong Kong. So Hong Kong had double monetary leverage, right? And created the most expensive real estate in the world, and now he's shorting it. Isn't that? I met him intellectually. I never met him, but his mind was like just seeing his, his concept, like how he identified the trade. And I don't know how he positioned in to get exposure, but just identifying that phenomenon, it's just like amazing.
Could this same thing be happening to Silicon Valley? It's not exactly the same, but
yeah. So the way I view Silicon Valley now with my interactions and stuff, I personally think it's a unique view. Cloud infrastructure is here to stay, and it needs to be developed, and the engine is here in Silicon Valley.
But as the infrastructure costs start increasing, they'll start diversifying to other geographies.
As the infrastructure cost starts increasing, wouldn't that mean their business revenue sales start increasing?
But the margin starts shrinking if they are in the expensive, if they're acquiring the expensive land.
I do think it's gonna spill over and go to other places. Of course, Silicon Valley is getting dethroned right now for sure, but it's gonna take decades and decades. Not because the way I view it is like it's not the 1 year engineer that comes in with the $300K salary. That's like, I'm gonna go to Texas, and then that human capital goes to Texas. It's the 10-year data scientist, 10-year plus data scientist who's like, I made a lot of money, or quite a bit of money, and I love Silicon Valley. I'm not going to be easily movable. It's the weak ones that are going to move out. I don't want to be provocative and say weak ones, but I'm trying to communicate it it sounds intellectually offensive. but it's the lesser human capital will move out, and the more robust and stronger ones are coming in. It's always a transaction, right? Like, if you think about it right now, like, I know people want to retire out and go to a cheaper place. Think about who's coming in. And if they're coming in buying a $2 million home, that means they're able to buy a $2 million home. That means they're doing some high-level human capital work. That society's paying that much money. So I think it's going to be a slow process. Of course, there's going to be new tech hubs that are going to be emerging, but Silicon Valley is going to be Silicon Valley for some time, at least my lifetime. It's going to be the worthwhile chase for me. I feel that way. Sorry, guys, we didn't even get into our lecture today. We got to start. So let's do it. Any questions before we get started on the discussion? Okay, all right. So today's technical discussion number 138, and we're going to talk about the collapse of the Roman Empire, and it's just really an infographic that I really geek out to. I've been studying a lot more history, economic history, and I guess that's how I'm spending my time, spending time with family and stuff too. Anyways, collapse of the Roman Empire, Fed plus, we're going to talk about the Feds and how they are lowering interest rates, which we kind of did already. And then we're going to talk a lot about stocks, some of the stocks that I'm watching, because now I think they're printing money, or I know they're printing money, and seeing how it's going to go. And we're going to look at some earnings as well. And then we're going to do a Fitbit acquisition analysis. You might not be an investor into Fitbit, but I think the acquisition analysis is worthy of analysis, because you learn from one use case. You learn from one example of a big entity acquiring another entity, so that in the future, when you see it happen again, you're prepared and you know how to respond. That's the whole education experience part. The experience part I can't teach you. That's something you gotta learn on your own. I can only meet you halfway. Anyways, I like to start off with a quote. The more you are thankful, the more you attract things to be thankful for. I like that quote. So it's the month of November. It's the month that I was born, so be thankful for the month. It's Thanksgiving's around the corner, so I figure I'm probably gonna have more thankful quotes. Before I came in here and started lecturing, I was outside in the parking lot with the coffee, and I was just like, enjoying the November morning air, and just like, this is we're gonna start another investment lecture today, and just enjoying I don't know, it's the morning air, something about it. Anyways, be thankful, guys, for what you have. Another one. Gold is the money of kings. Silver is the money of gentlemen. Barter is the money of peasants. But debt is the money for slaves.
Wow.
Yeah, I know. That's a quite the quote, right? Be careful with debt. Be very, very careful with debt. It's, in my honest opinion today, it's like it's literally the modern day form of like getting someone to be your slave. Like it's I hope it's intellectually provocative. I'm not trying to be offensive, but Knowing what I know about finance today, be careful with debt. If you have debt, try to focus on taking away the debt. You don't want to owe anyone anything. I know, like people, like when you start, you get a job, they'll send you like credit card letters left and right. So be careful with that, right? They're trying to take your. I don't know, man. It's a crazy game out there. We have a chair. Okay, I guess you found a chair. Any comment on that, on this code? I shared it in the chat already, but I really liked it.
Yeah, and the debt code. So what's a real estate like? Real estate, most of the money is
In debt?
debt, right?
Yeah. So real estate is a little bit different. Real estate is like you put down 20 to 30%, and then you have like 80% that you gotta pay down, right? But most of the consumers play the appreciation game, thinking like, oh, I'm gonna go for 1.2, it's gonna go to 1.6, and then everything's gonna be good. It's only when that 1.2 goes down to like 900K where you're like sweating, and now you're in debt. You're in crazy debt. It's a different game. I think the real estate game is more about the mechanics of money and how you manage that. Assuming that you found your support level in terms of prices. If you ask me about Silicon Valley real estate, yes, I think it can decline because real estate is a little too overvalued, but not zero, man. No, this is like if you can hold out for a long run and they continue to print money, which they will. Taxes are going up, right? Taxes, that's another sign. Then I think the real estate is just robust because it's not. I started thinking like. Yes, the corporations are here, but it's the human capital at the end of the day that makes the corporation. So unless we have like smallpox in Silicon Valley, knock on wood, then I don't perceive prices getting that bad. Now I'm wondering about Hong Kong though, because Hong Kong will never be the same. I'm sad because I never went to Hong Kong. Like it's like my country that I was born in. So I was born in Vietnam, in Saigon. That doesn't exist anymore. Right, so it's Hong Kong to me is like it won't be the same Hong Kong, but.
So in that case, you need to add one more code for.
What would you say?
I don't know. Real debt is the money of whatever.
Yeah.
Real slaves.
Oh.
You need to put Bitcoin in there. Bitcoin is the money.
Bitcoin is the money of the divine or something. The millennials are. Speaking of Bitcoin, educational purposes only. Now that I understand economic history and empires a lot more, and hopefully you guys will today. Bitcoin's becoming, a real life. I just think that if the game's going to reset, I think Bitcoin has a bright opportunity. And I would encourage, from an educational perspective only, that everyone consider a little bit of exposure, because it's not even like something that has real value, okay? But it's a social value thing, meaning like if there's chaos in the world, and there's higher technological infrastructure today in our pockets, and that thing could be alive. It's like our universal, global, agreed upon closet to store value. And it's the whole concept of like storing value cannot disappear. So there's the old school investors in here, older profile, who's like Bitcoin,
So where would you put it on Exter's pyramid?
Exter's pyramid?
Uh-huh.
Bitcoin is the evolution. It's something that.
Is it above gold?
Yeah. So I'll explain it to you. So every empire of the past, there's something different about every empire, right? They didn't have the technology we have today. They didn't have our hive-like communication technology. When I say hive-like, you understand a hive? Mm-hmm. How the hive communicates, and then everyone hears. We're in a surveillance economy now, where everyone has a mobile device. So if I say something wrong, guys like Gary Vee on YouTube or whoever, this guy's like, he kind of gained the digital conquest, I feel. But like, he said that, the shadows of the world will come to the light, right? Because we're in a surveillance economy, meaning like all the scams of the world, if you're trying to be a scammer, it's going to get a lot harder. Because everyone has a surveillance device, right? Millennials today, they say could be more depressed, because it's like they don't deal with the social exposure of the past. In the past, it's like, oh, well, if you do something embarrassing, only your class knows. So today, you do something embarrassing, you got a kid in the back like, bro, we got to put this on Instagram. We got it.
Forever,
right? And it goes on the internet, and the kid's exposed to 10,000 views, but he's just a young kid. How how do you mentally deal with that?
Okay.
Okay, it's economic power today, I'd say, like communication power, but I think the young generation, they're the first beta testers of it.
So this new school people are probably putting money in Bitcoin as compared to gold. And that's where
Yeah.
the process is going.
So understand that culture is changing massively, and it's not about what you like. Okay, I'm gonna. So it's not about what the silent generation or the baby boomers votes are, because they're kind of exiting the world. Trying to be very objective. I'm not trying to be offensive, okay? But their votes are decaying. My votes one day will decay too as I age into the baby boomer level, right? But we got to pay attention to the younger generation and how they behave. So I'm seeing kids who are, 6 years old or whatever, and they're in elementary school doing a presentation on Bitcoin, right? So it's focus on how they consume for the future. That's why Lyft and Uber are, at this price point, looks pretty bullish to me. Looks pretty good as well. Because it's how consumers will behave in the future. All the concept of the past is slowly decaying, but no one's confident enough to use discretion to say, hey, this is not the way. So that's why I love teaching, because it removes my insecurities, right? Have you ever been scared of something?
Oh, no.
Damn. Well, if anyone else has ever been scared of something, you learn to become less scared by building up your knowledge, right? So yeah, I think within time. So I think from just helping the retail investors in here, I say consider some Bitcoin. I'm not saying put like 20% of your life. No, you could, but last we discussed when Bernard was here, right? The fundamentals of the dollar versus the fundamentals of Bitcoin, and he was saying Bitcoin doesn't have a balance sheet or an income statement, right? But the dollar has a balance sheet and income statement, and what does that look like? The government's balance sheet and income statement, right? So which fundamentals look better? One is like -1, and one is 0. Bitcoin is 0, and one is -1. It's almost like, it's mathematically, the answer's right there. One is -1. You own this one, it goes -1, you lose value. You own this one, it's 0, but it's not losing value.
So then why not create a US 2.0 with somewhat positive balance sheet?
Yeah. So the 3-4 weeks ago, I put a quote. It says, Bitcoin's not going to 1 million. It's the dollar that's going down, causing Bitcoin to go to 1 million. So let's hedge ourselves, right? From the governments, essentially. From their sovereign objectives, sacrificing our efforts of today. That's what an investor does. Freaking protects his or her value, big time. Anyways, let's get started. So, starting with that, next week I'm working with this commercial real estate team. Little advertisement on my part, all right, guys. But we're just honestly I'm being transparent. We're just honestly looking for. I'm looking to raise $200 million. And they have commercial real estate deals. You don't have to come there having $250K, but you're welcome to come out to meet these guys and expand your network. The guy in the middle, still figuring out if he has a private jet or not, but got to meet him this week, and very, very cool guy. But he has a track record in investing into commercial real estate. So I'm trying to find the quality people and making sure they're honest, because it's going to hurt my brand if they're not honest. And these guys seem to be pretty honest, so I'm helping them host an event purely for free. I'm not getting anything out of it. Funny, right? I'm helping someone raise $200 million for free. Yeah, but it's not the money I'm chasing. It's the respect for someone who's putting in effort. So I'm chasing I'm doing favors. Yeah, social capital. So it's favor for favor. So if it's anything I could teach you guys, learn to do something for free. I've done it for 138 times or 137. Right? Learn to do something for free, and really, really good things come out of it. And you do it for free because you like it, not because someone else likes it. Right? I love teaching this class because this is the subject that I love revisiting every week. The gentleman on the far, your right, left, he's a Stanford graduate, so he knows a lot of people from Stanford. So again, I'm doing a favor for him, and he's introducing me to a lot of Stanford people. And we're in the, it's just slowly building up the network. So yeah, let me know if you have any questions on that. Starting with today. So We're not starting with the markets today. We're starting with Roman Empire and currency collapse. For thousands of years, money printing never works. So why do we do it? That's just a game we choose to play. You know, it's like, you know, we know Monopoly is going to end this way. Why do we keep playing it? Well, life goes on. Time goes on. So
We started with bartering,
we started with bartering.
but that was not scalable.
Yeah, it's inefficient. So speaking of bartering,
Redskins, Dodo Heads, Tepid Lemon.
let's start with a 3-minute video, and it's going to be a little fun one. And you guys are going to get a laugh out of this, and then we're going to get into the discussion.
Redskins, Dodo Heads, Tepid Lemonade. Get out of it. Redskins, Dodo Heads, Tepid Lemonade.
Hey mate, I'll take 5 of your Ratskins and one of those tepid lemonades.
It's one chicken, mate. It's not a chicken.
No, that's much better than a chicken, my friend. That is gold.
What?
Gold. The currency of the future.
Great, come back in the future. Redskins,
No, mate, I don't think you understand. This has unlimited use.
Can I eat it?
No,
Can I wear it?
no,
Can I use it as firewood?
no.
Starting to sound pretty limited, mate.
But you can melt it and then turn it into whatever you want.
Can I turn it into food?
No, you can't eat it.
Is this going to take long?
Hold on your horses, mate. We are dealing in futures here.
Oh, what's that? Is that a rock?
No, worse, it's cold.
Oh, cold. How do I get some cold?
Gold. I have people mining for it.
Oh, you have people. La-dee-da. We got a rich one here, eh? What do you pay them with?
Gold.
Next!
No, they say that this currency could be worth 1,000 Ratskins, maybe even more, in just a few years.
Says who?
The people with gold.
Fuck. Next!
Look, every economy ever has been controlled by the big chicken banks.
Next!
And this is our opportunity to get out from under the big chicken boots,
Fuck me.
shake up the market, and start taking back our economic independence. Are you with me?
No.
Really? Come on, man. Look, all my mates are doing it.
I'll just get your hand off it, all right? Everyone's trying to predict the next alt rock. First it was stone, then bronze, then iron, now gold. What can I even do with this shiny shit? Make fucking jewelry out of it or something?
Yes, you can do that. Great idea, because it's malleable. And best part of all, there's fuck all of it. It's a finite resource.
Mate, I'll tell you what a finite resource is. My fucking patience, all right? Now piss off!
You know what? Stuff it. I'm taking it back. That's like talking to my dad.
Yeah. Why don't you go discover avocado and smash it on toast, you dickhead?
Yeah, maybe I will.
Sorry, mate.
I'll have a dodo head, thanks.
Half a chicken. Piss on me, not you two.
Oh, no. This is way better than gold. It's silver, or as I like to call it, light gold cash. It's faster to mine. It's...
Got to be the last one, surely.
So that's like a little parody. It really explains, like, this guy was trying to sell the future currency, right? Imagine our conversation today is like, this is Bitcoin, right? Versus back then, what was the issue there? It was the chicken bartering. Wait, like, I want this for a chicken? It's inefficient, right? And he's like, I got gold. So today, it's kind of like, well, we got currencies, but then there's Bitcoin. So it gives you some perspective. I thought it was like a funny parody. Sorry for the bad language in there. Not my style, but the video was just too funny, so I couldn't.
Is that British or Australian?
I don't know, man. That's a good one. I'm not good at recognizing accents, but yeah, I hope that kind of sets up like understanding a little bit of history and so forth. So Roman Empire highlights really the whole entire thing, but we're gonna start off with just kind of understanding like what happened to the Roman Empire. If they were like one of the biggest empires of the world, where are they today? Right? We have empires who outlasted the age of the U.S. that aren't here today. Right? There was the Ming Dynasty as well, the ancient China Empire that became really big. I think the biggest one was it the Persian Empire, who had like 44% of the world's population. 44% of the population, something like that. Look it up. I forget the numbers. I'm not good with the numbers, but the Persian Empire, almost half of the world's population in that empire. Where are they today? So be aware that, okay, a currency collapse is real, and it's just like you're not just blindly working for money. And maybe there's something else in this world. So I've escalated away from money and moved more towards human relationships, because that means the most. So let's take a look at the Roman Empire. At its peak, the Roman Empire held up to 130 million people. That's huge. Over a span of 1.5 million square miles. So this is Europe, this is Africa, and the red is the Roman Empire. 130 million people. US is 330 million? Sorry, burping. Last time I checked. All right, so that was the size of the Roman Empire. Rome had conquered much of the known world. The empire built 50,000 miles of roads, as well as many aqueducts, amphitheaters, and other works that are still in use today. Today, our alphabet, calendar, languages, literature, and architecture borrow much from the Romans. Even concepts of Roman justice still stand tall, such as being innocent until proven guilty. Isn't that interesting? I found that interesting. How could such a powerful empire collapse? That's the question, right? Trade was vital to Rome. It was trade that allowed a wide variety of goods to be imported into its borders. Grain, beef, olive oil, glassware, wine, spices, and silk, iron, silver, and lead, marble, timber, and tin. The Roman Empire, their main trade routes. Trading was essential. Trading is nature to us. Trading is very important. Trading makes you wealthy if you know how to trade, right? Because when people are buying corporations, they're trading, right? If Cisco is going to buy FireEye, they're trading. They're trading away their capital to purchase a system, a unit. So this was the trade route in Rome, in the Roman Empire. So grain, marble, metals, all that. Pretty interesting stuff. All around Italy right here. Spain and the Black Sea and Egypt and all that. Trade generated vast wealth for the citizens from Rome. However, the city of Rome itself only had 1 million people. And costs kept rising as the empire became larger. Costs kept rising as the empire became larger. Administrative, logistical, and military costs kept adding up. And the empire found creative new ways to pay for things. Right? Hint, hint, okay? Yeah, it sounds familiar, right? We're finding creative ways to pay off our entitlements. True story. Along with other factors, this led to hyperinflation, a fractured economy, localization of trade, heavy taxes, and financial crisis that crippled Rome. The major silver coin used during the first 220 years of the empire was the denarius, if I said that right. This coin, between the size of a modern nickel and a dime, was worth approximately a day's wages for a skilled laborer or craftsman. You worked very hard for one day and you got this little nickel. That's your store of value. You see how money operates now? I did this work this entire day, and it got stored into this little metal thing. And if I lose that, then what I did for that one day doesn't mean anything. Isn't that interesting how we decide to store things? So that's why I believe in now social capitalism with this rise of technology. It's a worthwhile chase, because you're storing your value into what you did for your community, and the community can't be taxed. Well, they are taxed, but taxed on your end. They're taxed, but they handle their own taxes. During the first days of the empire, these coins were high purity, holding about 4.5 grams of pure silver, high purity. This made financing the pet projects of the emperors challenging. How was the newest war, thermae, I can't pronounce that, palace or circus to be paid for? Roman officials found a way to work around this. 90% silver became 50% silver was their solution. By decreasing the purity of their coinage, they were able to make more silver coins with the same face value. With more coins in circulation, the government could spend more, and so the content of silver dropped over the years. The dollar's content, or whatever content is, cotton, well, I'm not saying cotton's gone, but it looks a lot fancier, I'll tell you that. But the value is decaying. That's the concern. Silver content in terms of, now, this is like their leaders, right? The different presidents of the Roman Empire or whatever. Silver content of the Roman Empire, starting at 100%, by the end, it was like near zero. Isn't that insane? And so this guy's time right here, it was like 75%. By the time of Marcus Aurelius, the denarius was only about 75% of silver, right? And then by this time, it was, this guy did something interesting. Caracalla tried a different method of debasement. He introduced the double denarius, which was worth 2 times the denarius in face value. However, it only had the weight of a 1.5 denarii. Right? Here's a new coin, and it's gonna be worth 2. So you gotta work 2 days for this one coin. A day's labor, right? Or 2 days labor in one coin. And we all understand a day's labor, right? Everyone works, and you put in your 8 hours. That's your day's labor, and you get whatever, a couple $100 or something. By the time I can't even pronounce her name, Gallienus, the coins had barely 5% silver. Each coin was a bronze core with a thin coating of silver. The shine quickly wore off to reveal the poor quality underneath. That's how you rob wealth. Yeah. So it's in a way a very hidden tax, right? Because it's like, oh, well, we've already increased taxes to like 50%, 55%. I mean, there's some hidden taxes out there. When I was working at Silicon Valley Bank and the ultra high net worth people, I saw we would capture their income statement and all that. And I saw this line of expense, and it said upper income tax. I didn't know there's such a thing. There's an upper income tax. So if you're wealthy, you got to pay upper income tax. So all in all, right, from like spending tax to investment tax, I think it's more than 50%, to be honest. But I'm not going to go and do the numbers, right? Really find the numbers. Because it depends on your spending profile. Because as an investor, I invest more, a different tax than someone who consumes more, pays a different tax again. So just understand this phenomenon right here. Going down, the consequences. The real effects of debasement took time to materialize. Adding more coins of poor quality into circulation did not help increase prosperity at all. It just transferred wealth away from people. And it meant that more coins were needed to pay for goods and services. Right? So at times there was a runaway inflation in the empire. For example, soldiers demanded far higher wages as the quality of coins diminished. So wages and coinage, right? So the silver content of coinage went down, and the wages of the soldiers went up. Nobody should have any money but I, so that I may bestow it upon the soldiers, who raised soldiers' pay by 50% near 210 AD. By 265 AD, when there was only 0.5% silver left in the denarius, price skyrocketed 1,000% across the Roman Empire. Only barbarian mercenaries were to be paid in gold. Fascinating stuff, right? Hold on. Prices skyrocket 1,000%. If you own something real, tangible, right? That's or even Bitcoin in today's world. Yeah.
Think Venezuela.
Venezuela? Yeah. Yeah, you see it happen around the world, right? Dude, I gotta study my history, but Vietnam history. Anyways, the effects. With soaring logistical and admin costs and no precious metals left to plunder from enemies, the Romans levied more and more taxes against the people to sustain the empire. Huh. Damn. Right? If I could get an engineered bet, I'll go long some taxes right now. Right? Government taxes 5 years out, I'll buy it. Okay? Futures contract, I'll buy it. Hyperinflation, soaring taxes, and worthless money created a trifecta that dissolved much of Rome's trade. The economy was paralyzed by the end of the 3rd century, and trade that was left was mostly local, using inefficient barter methods, like you mentioned, instead of any meaningful medium of exchange. The collapse. During the crisis of the 3rd century, there may have been more than 50 emperors, right? Like we're talking about like thugs right here. Most of these were murdered, assassinated, or killed in battle. So Rome was split into 3 right here. The empire was in a free-for-all, and it split into 3 separate states, 1, 2, and 3. I'm not saying that's going to happen to us. I'm just saying like this is what happened to them, and it helps to know history to kind of see like, okay, where are things going? I don't see the whole war scenario today. I just see more devaluation, and then a non-physical movement away from the dollar to something more logical like gold or cryptocurrencies. That's what I see today. I don't think we're the type that we're the nation that go and hunter gatherer or hunter killer status. Barbarian invasions came in from every direction. Plague was rampant. trade networks were disintegrated. Right? Imagine if I couldn't trade anymore because of like, trade's very important. That's why I like trading. And such activities became too dangerous to trade. So business was disrupted. Think of Hong Kong today. Can I operate my dim sum business in Hong Kong when I got like, 50,000 people on the road in front of me? Well, maybe. but there's more likely that they'll damage my property than be a customer at that moment. So understand business can't operate in poor environments like that. You have to have a legal and controlled situation. Coin debasement and inflation helped lead to the demise of the Western Roman Empire, which would cease to exist by 476 AD. So everything disconnected became Eastern Roman Empire, and that's what it looked like. So that's pretty much the Roman Empire part that I wanted to share with you. I found that extremely interesting, and I think it fits well with our discussion today, right? With central banks and monetary policy and all that. But I have a little bit more. In this week's reading, I read this quote, and this is from one of the Fed governors, Larry Lindsay, former Fed governor Larry Lindsay. He said, "By the way, this always ends this way. Rome, the Ming Dynasty, Zimbabwe, it's so depressing. It's always, always, always ends this way. This end game we're all talking about. The financial arrangements of the states are no longer sustainable. It is not a pretty change if we get there, and it is a matter of political liberty because government will not voluntarily let itself go out of business." That's a key word, okay? Governments will not voluntarily let itself go out of business. It will use all its powers available to government to fund itself. So that's what I'm seeing today. Thinking like the governments can't afford a financial crisis, because if that happens, then it's end game. Because we're gonna come into question like, what happened? Well, you printed money and every asset inflated. I think that's like the truth that nobody wants to get out at scale, to be honest, right? Like what happened? Because right now the typical typical average 90% person, it's not gonna care about finance. It's not their attention, right? Most people know 2008, but most people don't understand the dynamics of it. So I think if we have a crisis today, then it's gonna be very, breaking news. Everyone's gonna know about it. It's bad business for the government, and the government itself is an entity with an income statement and balance sheet. So they themselves are a business, right? So in that sense, they're gonna do whatever they can to protect their business in a calm and their own way, in their own sovereign way historically. So I think devaluation of money is going to be continuing, and we're going to see stuff like gold, silver, Bitcoin, platinum go up. Educational opinion only, not investment advice. Yeah.
But in 2008, how was it not stock?
How was it? The prices of gold and silver?
Yeah.
I'll show you in a bit. That's okay.
Not the one the government not able to save the
Yeah. Yeah. So how were they able to save it?
How they haven't saved the recession on 2008 recession. The government didn't save anything, right?
No, they just printed money, and all the money went to stocks. So 2008, anyone lose money on the home? Well, I didn't, right? But I'm not bragging that I didn't. But I lost something, and you might not think about it, right? So 2008, I didn't own a home, so I didn't lose anything, but I lost something today. My ability to purchase a home, right? Because what happened? Who took the loss at the end of the day? The governments took the loss, right? They expanded their debt. They took the loss, and I owe that debt now. So I still lost. Isn't that crazy? I made a statement in the chat this week, and then Raj Sharma, he was like, "That's a subtle but yet brilliant comment." I said that, I'll pull over here. I lost today because they engineered prices higher, and I came into a 11x environment, income to real estate price, median income to real estate price environment. What do you say? In the group chat we said, let's see, right here. Nope. Okay, this is what I said. QE4, which is printing 4.0, whatever, is good for tangible assets like real estate or gold. Governments borrowing today to survive and sacrificing lives of tomorrow, my unborn kids. Right? I don't have kids yet, but they're going to pay the taxes when they come into this game. So now my question is like, do I want to bring him into this game? To me, it's like if you think that 2008 didn't hit you, I think it did, because today it's like no matter what, when you grow more mature, you have to buy a roof over your head. At least when you go off on your own, it costs more, but that's an environmental feature that you didn't influence really. So yeah, I think it hurts everyone, but you just don't see it. That's the reality of things. Did that kind of answer your question? In 2008, the governments took the hit. Meaning, if they didn't take the hit, then let me ask you guys this. I guess the big question is, why can't we default on the debt? If you don't know the answer, I'll tell you. Why can't we default on the debt?
There's no need. There is no need to default.
But let's say.
So government owns the print. Basically, government owns the print, right? The dollar is the de facto currency of the world. If any other country were in this situation, yes, they would devalue it. They would have problems, but not the dollar. Not now.
To answer your question, the reason why we can't default on a bond.
No one will invest in the future. Trust.
Exactly. Because I worked so hard my 65 years, right? And I bought this government bond. 90% of my holdings are in fixed income, government bonds. You're the government. You can't fail. Suddenly you say you can't pay me? 65 years later, I can't work anymore, man. Right? Technology didn't engineer enough for me to live to 120. I can't go back to the rat race. I can't go back to the wheel.
It'll be revolt.
Huh?
It'll be revolt.
It'll be what?
A revolt.
A reward?
Revolution.
Oh, a reward. Damn, that's a sick reward. But yeah, like, you see what I mean? We just can't. The game's too tight. So yeah.
So as long as the U.S. currency, dollar, is the de facto currency of the world, U.S. will not have a problem.
And that is being challenged
Once
hard
it's
today.
Then they'll have problems.
Exactly. So if you think, I don't think anyone's safe in this situation, right? Because this debt is everyone's. The 330 million population in the U.S. This is everyone's business. Mm-hmm. If you think it's not, wait until you wake up one day and milk's like, a cup of coffee is like $20. Wait, hold on, and there's 50% tax on that. It's already $20. Do I have to pay the tax?
Think about it this way.
Yeah.
So the top 1%, 10% has
The bulk of it.
bulk of it.
They don't want to lose that
So
position.
if
Yeah.
push comes to shove,
Yeah.
the government will just say, okay, I'm getting wealth tax, not 1%, but 10%.
Yeah. So word on the street this week. Word on the street this week is I'm hearing that in 2008 we had a financial crisis, right? And they added regulations. Word on the street this week is that they're actually removing some of the regulations that they put in 2008. Why? Right? It's another way to fix the problem. Like, okay, well, we were too regulating. We're gonna deregulate a little bit to unlock more capital. Same game, just another angle. They're doing the same thing.
Didn't Greece or Italy shave off 10% of everyone's bank accounts 5 years ago?
Yeah.
Did they?
Remember that, yeah. If you had money in the bank, they took it.
It was Cyprus. Cyprus did it, but it didn't really happen. They threatened to do it. They did part of it, but then they relaxed it back. You couldn't draw money out of your bank account. You could only remove a certain number.
Yeah. Interesting, right? So, yeah, knowing that, how do you position for? Now, I'm only talking about this whole currency stuff a lot more because it's a trade that's becoming real. It's a global macro trade that's becoming very real, right? I'm not going to talk about it. This trade is 10 years away. You see what I mean? Like, it only matters now because there's a trading opportunity, meaning someone's going to lose value, and there's a way for me to capitalize and make some value on my end. Because the longer I look at trading or the system and money and all that, I'm just looking for digital economic opportunities where someone was not paying attention, like, oh, no one's buying Uber at this price, well, they're printing more money, I'm going to go and capitalize. That's the essence of a capitalist, right, or an investor. So I see a trade in the dollar right now. The Ming Dynasty, so I'm not going to get too much more into the dynasty part, we're going to jump into stocks. Ming Dynasty, just letting you guys know how long they lived for. I think it's about 300 years. And this is how big they got. Okay? I highlighted some stuff. I was reading some history. Ming Dynasty, 1368 to 1644 of China was the largest in the world during that period, but suffered many inflations and contractions of currency. Because of hyperinflation of paper currency, the government returned to using silver as currency. So that's how, if the governments today disconnected from fiat, right, debt-based currency, debt-engineered based currency, and go back to gold would skyrocket. Gold would oh my gosh. Right? So that's why I think there's a global macro sovereign trade today. Gold is still a good position. Fundamentals are very strong for the next, I'd say, decade. Let's see what else. In 1425, Ming notes were trading at about 0.014% of their original value under this emperor. The notes remain in circulation as of late 1573, but their printing ceased in 1450. Minor coins were minted in base metals, but trade mostly occurred using silver ingots. See? So gold and silver is it's the historical, our ancient currency. And then here's Zimbabwe. I won't read about Zimbabwe. I'll send you guys this later, but it's the same thing. They had the same currency situation. Out of time, I'm going to skip this part right here, just showing ancient currencies. Well, yeah, it's on. Let's look at it a little bit. Just some pictures. Let's see. Ancient Greece, right? How people operated back then. Kingdom of Axum, ancient Rome, right here. Right? Denarius is what we were talking about right here. It got smaller too. Right? This stuff is very interesting. Like over time, just the currency becomes 1/40th of the base coin. Right? This is the base coin. This is worth 420 of the base coin. The gold coin right here. Right? The base coin, and then this is worth 1/40th. How about the Roman Empire? Let's go back. Ancient Rome. 1/100th of the base coin. Where's the base coin? Right here. Right? We started with this and then devalued to this.
Why is it smaller in size?
Well, think about it, man. It's like you could store cheaper stuff, more quantities of cheaper stuff.
It's still the same. People will melt it and sell it.
It's like inflation. You can't carry that many coins. Buy stuff.
Yeah. This store of value is very real. But if you study stuff like leadership and stuff, like now I see the real currencies in the reputation. So I encourage everyone to go out there and build a reputation for themselves for whatever segment, right? Some people online are doing it for gooey things. Have you seen those YouTube videos and like people just like playing with goo and like the sounds and all that ASMR stuff? Okay, I'm sorry. Never mind. Anyways, let's okay. That's pretty much all I had for the Empire stuff. Let's jump into the markets, do a little update, and then we'll look at some stocks and then we'll close out today. We got another about 40 minutes. But any questions on the Empire part? Was it interesting for you guys? Like that's what I geek out to these days, in case you're wondering. Central banks. So what happened this week, October 30th? The committee decided to lower the target range for the federal funds rate to 1.5 to 1.75%. So we're lowering interest rates. What does that mean? We could borrow money cheaper, right? Cheaper money means easier to pump up prices, right? They're really trying to hold up prices. So we only use this crazy monetary tool when there's something fearful. They say that something evil is lurking in this global economy. There is. So that's just something to be aware about. Why we want to study the actions of the Feds. Why are they doing this?
Wouldn't it make sense for the Fed to actually get involved before things go wrong, though? Isn't that what they're saying?
That's what they're doing right now, yeah.
So they're saying there is no problem, but if we don't lower interest rates, there will become a problem as things just can't go up anyhow.
Yeah, but lowering interest rates is a form of, look, who benefits from lower interest rates? Asset holders,
yes.
Right? So if you're not holding assets, you're getting poorer. Your purchasing power is going down. Most people what?
Own assets. I mean, most people don't have hundreds of thousands of dollars sitting in their bank account.
Most people own assets?
I would say most people own a house.
Anyone want to challenge him, or?
What do you think?
I would say most, 51% maybe,
You mean
or greater own a house.
houses out there
Here in the
in the United States?
50% of households own the house.
I would say most people would own versus rent. Like half
So most people are millionaires since average houses are on 1.5
Well, the $1 million homes are featured just uniquely in Silicon Valley, right? The prices
Go to
are.
Michigan and get a $40,000.
Yeah,
Like,
yeah.
Well, it depends on how you define an asset. Like, if interest rates are going up, oil companies are going up. You know, ExxonMobil's going up. You know, ConocoPhillips. So those are assets as well. So it depends on what kind of assets you're talking about.
When you say interest rates you mean interest rates are going down?
Yeah, I'm saying with
Yeah,
if
you
the
say interest
reverse
rates
was
going up.
happening, right? Assets are still going up. It's just different kinds of assets.
Yeah. So why are the Feds lowering interest rates if everything is fine? Again, you guys seen this chart before. This is the Fed's balance sheet. Just showing you guys right here. This was the tightening that we did. The tightening stop. That's where we're at. Again, nothing new. But this is a new deck that Axel releases, and Axel is one of the money managers I follow pretty religiously. The likely rate cuts comes from the backdrop of a Fed focus on weak inflation, softening economic data, global uncertainty, i.e. downside risk, concerns over an inverted yield curve, and desire to continue economic expansion. All right, this is the CFA's explanation as to why we're seeing a rate cut. 25 basis point cut should now be enough to uninvert the curve, given that the 10-year is currently around 1.8% as of writing, and a 25 basis point cut would bring the effective funds rate to around 1.63%. So again, that's the CFA explanation as to why the rate cut.
But if the Fed cuts the rate in the hope that it would increase the spending, but that doesn't happen because people are more conservative,
Yeah.
then it defeats the entire purpose.
Yeah. So if I was more of like a country like China, where I could hyper focus the spending, I'd probably get better monetary policy, right? But again, it's not easy being a sovereign. I'll tell you that, right? If you want to be a politician, you come into like, massive debt never before seen in history. How are we going to handle this? I don't want that job. I like this job. I rather do the teaching and observing and investing. It's just too much fun. The dollar. So how did the dollar react, guys? So the dollar's been going down quite a bit. This is good for gold, right? Good for real assets, tangible assets, good for stocks. Cheaper dollar is good for the rest of the world, especially for emerging markets. I think that emerging market trade is probably live now. So I would consider positions in emerging markets. You guys know, so we look at Stanley Druckenmiller's portfolio today, right? 35% of his portfolio is in emerging markets. That's significant. Because most money managers, the conservative ones, they only go like 2.5%, 2.5%, 2.5%, and that's it. They don't go anything more than 2.5%. Think about it. If you have 100,000 and you're just playing 2,500, 2,500, or even just $2,000 on every bet, one bet goes bust, you don't care, right? But if you're playing 100,000, if you have $100,000 and you're playing at 35%, 35K, you care, right? So this guy's managing $100 billion doing a 35% bet on emerging markets. What does that tell you? That's a hot play right now. There's a lot of upside in emerging markets. So I'd be watching that for, you think it's too high, you could wait for a decline, but consider emerging markets. So everything from like Russia, Brazil, China, India, Vietnam. So dollar's going down. I'll continue to monitor the dollar. As long as we get lower dollar, then things are good for stocks and everything else. S&P 500, again, this is the result of printing of money. Right? The moment that we say we start printing again, this is what happens to the markets. S&P 500, all-time highs. Nothing much to comment, but I think maybe a slight decline, but higher we go into second quarter 2020. Until we'll analyze the communication. But I think for the most part, we'll continue to print from now until beyond. Is stocks going up a good thing for people who have positions? But for kids who are in school today, who don't know any finance, or not able to buy stocks, are getting poorer.
Well, do you believe it's just purely the dollar weakening, or there's value creation in America too, right? Creating new medications, new kinds of industries.
Yeah,
so
yeah.
It's
so
not all just the dollar weakening. I believe most of it is value creation versus dollar weakening. Because if you actually calculate how much of it's due to dollar weakening, it's a very small percentage of the S&P.
So I think
Earnings are coming out for businesses and they're just breaking records, and there's value being created.
So I think
that's for sure. There's a component where value is created, but there's also a component where value is engineered. And as an analyst, we want to see what percentage is it value engineered, like software startups that are overvalued, versus true value being created. So for example, value engineered would be like a 30x price to sales software company. That's engineered value. Or WeWork, that's engineered value. But real value being created would be like Apple, let's say, or Microsoft. That's real value.
But I mean, the Fed and whole idea behind this Fed lowering interest rate, what they've been doing for some time is so that there can be more economic activity, companies can save that money, invest more in business. Unfortunately, that hasn't happened.
It's been
Companies are
buybacks.
buying back the
Yeah.
shares. And there has been no real value creation for a community for the last whatever Fed has been doing in this country. S&P is going high just because companies are buying back their stocks.
Yeah,
I think only 4% of the overall stocks in the S&P has driven it to an all-time high. The majority of the stocks.
I think it's 8%. I think it's 8%.
So again, it's 8%, right? Majority of the stocks haven't seen that.
Yeah,
So-
but if you consider like your assumption is that they're buying back because they don't know what their company is about. You know, sometimes
They don't
buy
see-
back
they don't see
because
other
it is
opportunities.
They
undervalued.
don't see an opportunity which, you
Yeah.
know.
Well, let me give you an example. Warren Buffett last year bought $1 billion worth of his own stock, and he only says, "I'm only buying it back if I feel it's undervalued," and he's planning on buying more of Berkshire stock back.
Why does he have? Why is he the cash king now?
Why is he the cash?
He's got most of the
But-
cash.
but-
He has the biggest cash position
Even
in the
making
world.
opportunity.
Yeah, but
Yes.
he has opportunities to buy. I mean, he could buy stocks. He could buy businesses.
He could,
right?
but he isn't. His actions aren't showing it.
Yeah, I know, but he's using it to buy back shares. I mean, what I'm saying is, considering his reputation, he's buying back shares, and he only believes you should buy back. And he's told that to the Apple CEO as well, right? The Apple CEO believes the exact same thing. He's saying the only reason I buy back my own shares is because I believe they're undervalued, right? So, you know, if you're looking at these money managers buying these shares, looking at some of these CEOs buying their own shares, some of them actually know what they're doing.
Yeah. So I mean, I talk in here. There's a concept of like buying, like Warren Buffett style undervalue, and then there's buying relative value.
Well, if Warren Buffett's buying back his own shares, the market's pretty much undervalued because his stocks move with the overall market, right? Is Berkshire Hathaway? If there's a crash, is Berkshire Hathaway?
I wouldn't agree with that.
Yeah.
There was an interesting analysis of the companies buying back the shares, and it was so fascinating to see that how most of the companies got it wrong, because most of them bought back the shares when the shares were all-time high.
Yeah. Yeah. Yeah.
Basically, you use your capital to buy the most expensive asset,
Yep.
and when it went down.
Yeah.
And then later
Yeah.
on it went
So
down.
how's
There's always
exactly?
never been a most fiscal responsible decisions of buying back shares.
And yep.
That's not always.
So where's the fiduciary duty for shareholders
Exactly.
besides engineering higher shares?
Yes.
Irrationally, right? So I mean, I always use the example of a drug. I don't do drugs. I hope you know that. But when you take a drug, it'll give you +1. But tomorrow it'll make you -1, and then by the third day you're neutral, right? So everything. I mean, that's my. I guess you could say that's my religion. Maybe I believe in. If you want value, you have to put in value to get value out. You can't just ask for value. So if you take a drug, it'll get you high, but it'll get you low the next day. You have to pay it back. Right? It's like working out too. How long can you go without, eating healthy? At some point, you have to give it back, right? I mean, you eat a cheeseburger today, you got to burn it later. You either burn it through exercising, or you burn it by letting just time pass and you starving yourself. But again, going back to markets. So markets appear to be engineered higher with the markets hearing the news. So you look at the NASDAQ right here, also pointing higher. I think the markets are going higher. That's what we've been communicating in the last 2 weeks, I'd say. I think gold is still positioned well because we're just devaluing the dollar. Dow Jones hitting triple top, I'd say, and looks like it wants to go higher as well. The laggard, I don't have IWM on here. All right, anyways. Looking over at precious metals, I'm keeping the market update pretty short. This is what I'm seeing in the precious metals this week. This is the latest update that I'm seeing. Notice that the Fibonacci retracement, the blue line right here, it held at the 23.6. Looks pretty interesting to me. I think gold may have found, this is my opinion, some people think maybe a little bit lower, but I think gold's probably found a base right here, a higher base. I think this is the higher low right here. As in, I think that if you're going to consider gold, this to me looks like a nice area of consideration. So I'm this week I mentioned in the chat that I'm looking to position heavy back in miners again. So precious metals is the reason why is I'm looking at another June to September move. That was an awesome move. Right? I'm thinking another one. Because it's just like they went full force, lower interest rates and money printing, which is good for gold. So that's what I'm seeing with the charts. Any questions on that?
How high do you think it can go?
How high do I think it go? I
in a quarter.
In a quarter. Okay, I was gonna say 3,000, but that's like maybe a few years.
Short term in a year or.
So let's give you the 10-year. Okay, some of the credible money managers say 12,500 in 10 years. That's crazy, right? Depending on how bad they devalue that. In the next quarter, you asked, November cyclically, if I don't have the back test on me, November cyclically is good for gold. So I say probably in the next quarter we would clear 1,500, 1,550. We would get a new high in the next quarter. That's my anticipation. If I'm wrong, then I have a stop right here because I'm positioning heavily, right? So I start now and watch the stop around here. Probably the feed right here be my stop. But I think it's time to consider this next higher low right here for gold. Silver looks the same. Well, let me read this out for you. Daily gold chart breaking out here, the short to mid-term downtrend line. I'm positioning in heavy for gold and silver. This is gold in terms of the weekly chart. So the weekly looks pretty bullish, and then you're also looking at the weekly 20-day moving average. It looks to be respecting that. So I just wanted to highlight that. Again, this is more technical analysis. Let me know if you have any questions. This is the breakout right here, right? Let's say you bought this breakout. So this is a trading example, right? Weekly chart, and this is like 2016 right here, 17, 18, and you have years of resistance. The longer it's acting as resistance, when it finally goes over, I would even buy right here. Why not? My conservative style, well, I guess you could say it's conservative style is, well, aggressive style, you buy right here. You just buy that day when it breaks out. Luckily, you have some sort of alert, right? But if you don't, I still buy right here. I don't care. Because this is several years of resistance that finally broke out. And this is a good trade right here, right? It's a good trade right here. And now it's retraced a little bit back to the 20-day moving average on the weekly chart. So I'm detecting maybe support right here. So I'm anticipating a bounce right here. And you got a bullish pattern right here as well. Falling wedge with a pipe, with a pole.
Let me ask you a question. Do you think gold and the S&P can go up long term?
Yeah.
Together?
Yeah.
I don't think so.
Why?
I think it's going to be one or the other. Well, because you get into gold and silver because of fear of the overall market, right?
No.
So you're saying is there's enough money for everyone to throw around everywhere, in every market?
No.
Yeah. So I'm saying it's a cycle.
Well, I didn't say any of that though.
Yeah.
What I'm saying is that S&P 500 will rally with gold because there's a currency debasing.
But not in the next 10 years, right? Is what you're saying.
10 years S&P 500 has to give, I say.
Like those money managers you're talking about, they're saying in 10 years it's going to be really high.
Just gold, not S&P 500. So yes, I do see S&P 500 rallying with gold. I know it sounds counterintuitive with the typical mechanics of the way the markets work. Reason being is that we're printing money. Printing money is good for let's say stocks. So S&P 500, the finest companies, will go up in value. So that's the printing of money. But it's also robbing people of the dollar value. So it's bad for a dollar, which is good for gold. So that's the logic behind that. So this is gold weekly, starting to look bullish again. So again, I'm positioning heavy. Let's look at silver. What do I see for silver? Silver is holding this red uptrend right here. It's been respecting it very well. It's always nice to play the trend. And now it's kind of diverging away from the trend, but also breaking this downtrend right here. So now I'm looking, to add even more right here. I like it. I like silver right now. For me to not like it would probably be the break of this red line. I keep my technical analysis very simple. I don't like to. When I first started, right, the ambitious kid in me, I say, it's like put all the indicators, all the oscillators, all the overlays, put it all on there. Then you get so noised out. Now it's just like, what's the price doing? What are the fundamentals? Be very patient. I guess it's because you've been playing for a while and it doesn't hit you emotionally anymore. I think that's when you get better too. So now I just take a position when I feel like, okay, this makes sense. And if I feel like it's a high value conviction play, then yeah, I'm gonna bet bigger. So I'll go over a lot of stocks, right? But then I might have just a few contracts in there. But for something like this, I have a lot of contracts. Yeah. Silver's a great play in my opinion. Trying to buy more than 100 contracts here. I'm growing my share size. Okay, 100 contracts is not 100 shares. You guys know that, right? 100 contracts is 10,000 shares. Just saying. It's like, oh, this guy only trades 100 shares. Like teaching this long and only trading 100 shares. No, I'm playing 10,000 shares. Synthetic or whatever. Uptrend line remains in play, so I like silver a lot. Silver's looking very good to me. Platinum. So platinum, we talked about last week. This trend line held. We were talking about right here. So I don't know if you guys caught the platinum trade, but you can't buy it on Robinhood. You gotta buy it on like a different platform. Robinhood doesn't have it. I know there's a lot of Robinhood people here. So PLTM is the ETF. So platinum looks good to me. Let's see what else. Cryptocurrencies. This is the update on Bitcoin. Again, I like to just draw clean charts, keep it simple. Break of that downtrend line right here, finally, I'd say. And also holding the 200-day moving average, which is the pink line, and it's setting up a flag right here. This is looking pretty bullish. And it comes at a time when we announce all the money printing too, right? Because October 11th, let's say this is October 11th right here, when we announce that we're going to start QE4, but not call it QE. We're going to do not QE. That's what they said, right? We're going to do not QE.
That if it walks like a duck, it's
Yeah, exactly. Yeah, that's what. Yeah, you watch the CNBC. One of the investors said that. If it walks like a duck, talks like a duck, it's a duck, man. So October is when they announced money printing, and then someone just got big right there. This is a big trade right here. So I think it will hold 9,000. And educational opinion only, I say consider some Bitcoin now. I know it's the weirdest trade, but I think I've developed like a view on the world, history, economic history, culture, demographic, forecasts where people are kind of spending their money and attention, right? You guys are not just listening to me, but there are people on their phones listening to me too, right? You could be in two places today, digitally and physically, like John over here. I'm kidding, man. No, I'm kidding. You use your phone. It's okay. It's the new era, right? So yeah, I think it makes sense because this is like a investment that I see. It's weird that I'm saying investment, but it's a trade that I see where it has substantial upside. Meaning, $100 goes a very long way with this instrument. So I'm not saying go bet 20%. I'm saying go bet like 0.01 because it could be a substantial payout. At this point, I feel just understanding the monetary system and the empires of the past and how everything decay. It's protecting yourself, right, from the money devaluation. Litecoin, here's another one. This one's a very clean setup. Break of the downtrend line. This is initial signs of reversal, right? Normally, it won't play out like the way you want it, but this is a start to consider. Every time it breaks a major downtrend line like this, I start considering it. It's on my watch list because it'll start grinding sideways. It could go down lower, but if it doesn't, it starts to go higher, but it starts to reverse. So I'm interested in Litecoin, and I'm also interested in Ethereum. I'm not interested in XRP. Ethereum, it's not my greatest too. If you ask me in what order is Bitcoin, Litecoin, and then Ethereum, that's the order I like. Because I saw the fundamentals of the XRP. There's nothing bad about it. It's just the amount of the legal entity that holds all the coins on that one. So I'd be careful with that one. So Bitcoin.
What is it? Ethereum is not decentralized.
Yeah.
So what is it right now? You know?
Which one? Ripple? Oh, because you got to position it, huh? I could pull up the chart real quick since we're on this topic. Let's see, crypto. Ripple is currently at 29 cents. Now, it's not truly decentralized because if you analyze the LLC structure, you start to see it like, oh, it's actually quite centralized. But I think the crowd, who knows that first of all, right? So 99% are going to play this anyways. So I do think there's a trade here, but it's not a long-term hold. Capitalize, make money on it, trade it, but channel it to Bitcoin is how I see it. Because it's just there's some shady ownership in that one. So yeah, what I'm saying is that if Bitcoin goes up, everything else goes up. So trade that one, make some money, but channel it to the more superior one at this point. It's still emerging technology, and it's weird to, a lot of people will challenge it, but I say this is not like a typical investment club. This is more of a technology alternative type of investment club that is going with the times.
So there's this ETF called Coin, K-O-I-N.
Mm-hmm.
What does that consist of?
What is it? What?
K-O-I-N.
Yeah. What was your question? What does it?
What does it consist of? I mean, does it consist of
The one that I like for Bitcoin.
It's KOIN.
Oh, the one that I like for Bitcoin is GBTC. So if you don't have this one, is probably your best access to if you have a broker already, Charles Schwab or whatever, or whichever. Go with GBTC. It's the Grayscale Bitcoin Trust. Credible money managers like that. For the coin ETF, it might be a basket of stuff.
So he was asking about KOIN.
It's KOI.
Oh, it's KOIN. Like where are the holdings, right?
Yeah.
Let's see. Reports rating. I need to know who the issuer is. Is it Direction? Because I'm just going to like a very general page to see what the holdings are.
That's the one you're looking at.
Is it iShares? Yeah, because so what I would do is just go to KOIN prospectus, and they'll tell you everything. They have to be honest. There's the legal document that you read to just learn everything about the coin. I guess it's innovation shares. Yeah. So this is new. I just want to see the holdings to see what's in there. So yeah, this is nothing what you think it is. It's like Intel and all that.
So the companies powering the blockchain stuff.
Yeah. So I would read the prospectus. Go in there.
Companies which are invested in the blockchain.
Yeah. So if you want to learn what this instrument is about, you go into the prospectus, and it will tell you like, okay, fund summary. What's the summary? Innovation shares seeks to provide investment results before fees to track performance of the Innovation Labs Blockchain Innovation Index. Ooh. So this is a blockchain. This is not cryptocurrency. It's blockchain innovators. So you get exposure to whoever has a piece of blockchain. And I was actually quite surprised to see like stuff like Salesforce all in there. That's pretty nice. Yeah, maybe something to consider. But read the prospectus to kind of get more visual on that. So yeah, that's great because Jim Rogers is another credible investor that I like. He's bullish on blockchain, but we haven't up to this point we haven't really thought of I haven't really found any great instrument to give me exposure to blockchain. So if that one's like one of the first, then the crowd will rush to that when Bitcoin performs, right? I think Bitcoin will act as an index for now until that changes. Where was I? So Ethereum, we looked at. Ripple. So the Fitbit analysis. So let's jump into that. So we're at 11:45.
Yeah, what's Litecoin?
So it's just another one of those coins cryptocurrencies that exists out there. It's just like Bitcoin came and then Litecoin came. It's just like the originals. That's all. Yeah.
Analogy that Bitcoin is gold, Litecoin is silver.
Yeah.
It's just I'm just.
Yeah, I mean, yeah, it's just an analogy. I believe in it because. I look at, like I said, I look at many layers, right? And I'm looking at people with phones today, and those phones act as servers, right? So I think the infrastructure is there to support Bitcoin, and also it influences the younger generation. So I'm thinking about what the younger generation thinks, and will they use it, and will they come into this world? My unborn kids coming into this world and look at the currency, whatever I teach them today, they'd be like, man, what did the previous world do to the currency? That's what they would ask. That's what I think. Anyways, let's look at the Fitbit acquisition analysis. So Fitbit, if you guys know, is being acquired by Google. Why do you guys think so? They see some upside in that, right? This thing was a beaten down stock. This is a sample of a stock that just IPO and went down like more than 50%. Yeah, and now they're buying it, pennies. Well, reasonable price to sales ratio. So now Google kind of revealed to me where they see the market prices or where they're willing to acquire. They're not willing to acquire at 30x price of sales or 15x price of book. They're willing to acquire anywhere in range of less than 5. Right? That's where the acquisition range is currently. So when I look at stuff like FireEye to me looks like an acquisition target. So this is the monthly chart on Fit, and this is where it's priced currently. It's going to be higher, I think 30 cents. $7.30 is the acquisition target. Let's go to valuation. So yeah, this again, if you're not trading Fitbit, I'm not trading it, but I look at it because I want to know what the big players think the market price is right now. Because you can only base off of transactions in the market live today to get a feel of where everything's at. So market cap is 1.84 billion. Is what I'm seeing. Oh, I'm gonna sit down for this. 1.84 billion, and then the employees is 1,625. I look at employees now a lot because software companies or perceived software companies should have very low amount of employees because they're lean, right? Price to sales 1.19. Price to book 3 times. This is where Google is willing to acquire. They're not buying a overvalued asset, but they're buying an asset that doesn't make any money. So the moment they acquire this asset, it's going to be costing them money, but they got enough money to handle this cost because they perceive value in this ecosystem or whatever this thing is doing, right? So, if you look at other charts, what other charts kind of look like this? FireEye definitely does look like this. So here's FireEye. And we'll go over to, look at this. This is FireEye, right? Trading at those, price to book, price to sales area. That's very low in the software industry. And this is a better business because it's making 831 million versus the other one, making, let's see, 1.5 billion, but a lot less margin. So no debt, and that's the amount. This is where Google is willing to acquire, right? Get a feel of this. The press release, if you want to know, it's going to be for $7.35 per share in cash, valuing the company at 2.1 billion. So they think this company is worth 2.1 billion in this market right now, right? Can you imagine the investors that IPO, right? And this stock price was at $50. Man, and now they're getting acquired down here. They were so much richer at IPO.
Well, here's the thing about that chart. You should look at logarithmic, not necessarily, because it skews it because
I'm just looking at prices
more
though.
dramatic than the downs.
Yeah, I'm just looking at price though. So price by shares.
But if you looked at it in the logarithmic, it looks very different. Is what I'm trying to say.
Yeah.
Than just something just tanking like that.
Yeah, but losing your money isn't logarithmic. It's absolute.
It just feels logarithmic.
What I'm saying is it doesn't look like it's flatlining.
Yeah. So yeah, that's fit, guys.
If you look at it in a non-logarithmic scale, it's skewed, right? The ups look more dramatic than the downs.
Yeah, because you're seeing like a move of like $20, but there's all kinds of equally proportionate moves on the lower end of the chart.
Yeah, so what seems like a big move at that end right there might actually be a lot bigger.
You just shorten your time scale. You can see those.
It's like looking at it from a percentage instead of price scale.
Yeah.
Kind of thing, right?
I mean, you're getting too technical on the. I'm just looking at where IPO, right? $30. $30 for whatever shares is $30 for whatever shares, and I'm looking at where the bought out is today, around $7, and I'm looking at the peak of where valuations were. So if you take this $50 and you multiply it by this many shares, these investors were probably more than $10 billion. Their shares were worth more than $10 billion. Meaning like they're selling their home today at, would it make sense to say, I don't know, like 200K versus $1 million, right? That's all I was looking at. So what's the business model of this? Like why exactly is Google acquiring this? Because this is probably going to change the way we socialize with each other, right? I don't just end it there with like, oh, they acquire a stock, it's all over. This is a consumer technology. Fitbit's a consumer technology, meaning people wear it. So if Google acquires it, they're going to invest into this platform. So if I want to build out a network, let's say in the fitness industry, and I was a fitness influencer, this is a tool that I must leverage now. You see, I'm thinking beyond just like, hey, it's an exit product, I can't invest anymore. Well, how can I directly participate? Just like how I'm directly participating on LinkedIn. LinkedIn was acquired by Microsoft. Now I'm building up my it's like a digital conquest on LinkedIn. So I'm 1% on LinkedIn, but I'm trying to sustain that because I know it's inflating. I know the guy in the back is like, I work at LinkedIn. He's like,
Have you heard of biotelemetry?
I haven't.
So basically, you know how the cloud centralizing data processing and everything, right?
Mm-hmm.
So the medical industry is going through some similar shit, where you have sort of remote monitoring of people's like pacemakers, hearts, all of these kinds of things where they're having wearable devices, and so they don't need to come into the hospital. They don't need to do.
Yeah.
And so everything is centralized monitoring, kind of like ADP for security.
Yeah.
Right. So
How big's that company?
So I'm investing in this company called Beat. Apple is working with Beat with their wearable devices. So they're using it for medical applications, and so I'm thinking maybe Fitbit could be going in that direction.
Yeah. So the way I analyze this, right, a highly intelligent entity like Google acquires something like this for $2 billion, then they believe in the market opportunity. So what is the market opportunity? Google perceives that IoT for the human body to be very real. And we know another competitor in that space is Apple with their Apple Health device. So this is a growing market, but I mean, investment-wise, you can't really capitalize on it anymore, right? You can't really invest in Google to get that peer returns, but what you can do is just figure out how they're going to build out this ecosystem, because they're going to invest into Fitbit. So if you want to become a Fitbit influencer, think about it.
But here's the
you got some, you know.
It's also very likely that Google may kill it to promote their own Android Wear watch.
Sure.
The same.
That's an expensive way to kill a competitor.
That's what they did with Motorola. Bought it, got all its technology, dismantled it. So Google is famous for doing that.
Yeah, but the real value is not in the wearable device. It's whoever controls the data. So, I'm just giving an example from my stock. Right?
I mean, that's true.
So my stock, Apple is not in control of biotelemetry, right? So biotelemetry actually dictates to Apple, we're going to work with you, and so it's not like Apple's in control, even though they have a large market share in the physical device. It's much like Microsoft, right? The value is not in the PC; it's more in the software, right? So it's a similar situation.
You work in software, right?
Yeah.
Okay. My perception of software is like, the value's in the data, but where does the data come from?
Yeah, but I'm saying is
for this one at least, because industrial data is another set of data. That's completely different.
Yeah, but I'm saying
that comes from machines.
But I'm saying is biotelemetry can create their own device if they want.
Sure.
It doesn't necessarily rely on Apple. Is what I'm trying to say. They happen to work with Apple because they don't want to focus on building out a physical device, but that's the point I'm trying to make. Yeah.
Okay. So Fitbit, looking at the IPO, right, down 52 bars, 26%, 27%, 91.53%. So just use this as education for your next trade. That's how I use it. VC analysis, who are the participating VCs? True Ventures, Uncork Ventures, Sapphire Ventures is SAP, SoftBank Capital, Qualcomm Ventures, Foundry Group, and all that. A lot of these guys are here. Sapphire Ventures, Palo Alto, man. This is why I really enjoy this space. And I see why you drive 7 hours to come down here, so I appreciate it. And then how much funding has the organization raised over time? 70 million, which is not that much. I'm surprised. The very big bets in VCs are like the 50 to 100 million. I'm talking about concentrated 100 million bet. Now let's go over at some stocks and then we'll call it a day. I know you guys are getting tired. We have about 5 minutes left, so I'll be a little quick. These are kind of like my trades for the week or whatever I'm seeing. So Twitter I like. I think Twitter is relatively priced well. I know before I liked it up here, but earnings brought it down. That's just the nature of the game. I still like it. I think this is like a cheaper Facebook. That's going to be a Facebook. If you ask me what the valuation is, why do I think it's cheap? Well, the technicals look very good. Should I show you technicals first before I look at the valuations? So technicals, this is the updated technicals right here. I'm seeing a reverse head and shoulders, which is typically bullish, but it's going to be choppy for the current environment, currently because it just gapped down. But I'm hoping that $30 around this area will sustain. I'm hoping support will be right here. And if that's true, then this will act as a reverse head and shoulders. But that's just the quick technicals on the monthly. I want to look at the fundamentals as to why I like this model. I've looked at the recent earnings. They're growing in users. It looks pretty good to me. Cash position looks good as well. The relative value of this, if you look at it, it's worth right now $22.9 billion. They are profitable at $1.6 billion, and sales are at $3.36 billion. Not that many employees, only 4,000 high-quality employees. PE, not many software companies, B2C, have a positive PE. So this is undervalued to me because it's software with earnings, right? When software doesn't normally have earnings. Price to sales is 6, and then price to book is 2.7. From a relative value perspective, I feel comfortable in this. Even if it's down, like against me, my starter contracts, I'm okay because I have leaps on these. So now I'm looking to add more on Twitter. I like Twitter. That's what I see. You see, well, I mean, some people will be stressed out because they're down, but like I think after a while you understand the world and the direction of everything's going. I feel pretty confident even though my starter contracts are against me right now. Right? I'm still willing to hold, but now I'm going to add more because I like the position. So I always throw in 25% starters, and then if it goes against me or if it goes with me, then I'll add whichever. So I like Twitter. Because of and also the money printing environment, right? And you gotta remember that too. Take that into consideration, the macro environment. Looking at Slack, this one's been in decline for some time now. We're moving into November, right? You guys know Slack. This is like a sort of a household name, maybe consumer and enterprise name. It's very popular. I've been watching this for some time. It's pretty overpriced still. Ideally, if this could go down to $10 to $15, I like it. But for now, it's at 20. But I'm also concerned that money printing is going to reverse this. So how am I going to position into this? I'm going to keep it simple. That blue line, the moment it breaks that blue line, I'll start considering. But it'll be a starter position. 25% of the position I want to get in. Because this is technology that I think has a lot of upside. If you look at the market cap on this, it's only 11 billion. I think it could easily do 3x to 5x. So 3x of this price would be $60. So I think this one could go $60 if the economy's okay. But if the whole recession stuff comes back online, then back out of this, consider gold miners. Gold miners are still a solid play. So I have to watch Slack because I think the product's great. I think the product's good.
It's getting stiffer competition from Microsoft Teams.
Yeah. So think about this as well. It's getting competition from Microsoft. And this is good technology for another enterprise who would consider as well. If this gets too low, another enterprise would definitely come in and buy this, even at 5. If it goes to 5 billion, what's the market cap of this right now? It's 12 billion right now, right? If it goes to 5 billion, dude, with the balance sheets I've seen out there, maybe even Intel would go and acquire, even though it doesn't make sense, right? But it what? Yeah. So I like this one if it goes to 15. I think it's hitting its oversold pressure points, but just be careful still because it's still in a downtrend. You just don't play when it's in a downtrend. The moment it switched to uptrend, then you consider it because this one has an upside story. At least I feel. And product's good. The VCs are good. I'm not gonna look at the VCs. The valuation's a little high right now, but something that shouldn't ignore. Now the valuations could look better in the next earnings if they start earning more, right? Because the multipliers start going down if they start earning more. So be aware of that. Uber. So I'm starting to like Uber as well. This is going to be one of those trades that I have to pay attention to. It's not making money, but what is in this software environment? But it's the money printing that I'm concerned about. So I know Stanley Druckenmiller, highly credible, long-term, very long-term, credible money manager. It has a 3.7% position in this. 3.7% position. Okay. I think this is going to set up a reverse head and shoulders, and this is something one should consider, educational opinion only, at the right time. I'm not going to tell you, I can't help you with the exact prices, but I could show you, how I feel about this. And in 10 years, 5 years, maybe even 3 years, I'll be right for sure. But in the short term, that's another thing. Oh, can't find it. So this is Stanley Druckenmiller's portfolio right here. Again, this is my favorite investor of all time. Because he's like one of the few guys who actually does a concentrated bet. He has 20% in Microsoft. I like Microsoft a lot now too. If they're printing money, Microsoft will for sure go up, so that's an easy trade. But check this out, Uber is right here. Uber is 3.7% of his portfolio. So if I go down, and it's a new holding as well. If I go down and arrange it by weighting, just 1 second. If I arrange it by weighting, the biggest one is Microsoft. His number 2 is Amazon. His number 3 is Netflix at 5%. Should we ignore those who keep talking about holding period ending for Uber? Yeah, I wouldn't worry about that because Uber was a standard IPO. It wasn't direct listing. If it's direct listing like a Spotify, they're able to sell right away. But yeah, I wouldn't be too concerned about that. Just because I think I'm looking beyond just the financials, right? The financials don't look great for Uber, but it's the social environment, it's the users, it's the traction that they're getting, the global traction that Uber has that I can't, that I have to price a premium into it. So Stanley Druckenmiller has a 3.7% position. This is a big position for him, and I wouldn't be surprised if he scales this up to a 7% position, because for something this scale of technology at only $50 billion, and I'm trying to look for charts. This scale of technology, $50 billion in market cap, right? Trading at a price to book of 2 and price to sales of 4, when almost everyone's using Uber. It sounds very compelling to me, and I think Stanley Druckenmiller sees it too. So in terms of charts, we have to be patient here. Again, I see a reverse head and shoulders in development. I do see that this trend line right here is broken. So now that we're in this phase right here, this regime, I think we're going to go with something like this, but definitely I think we found a bottom. So that's my take on that.
I think I do agree that after 6 months, the employees will have the stock options to buy. It will have some downward pressure.
Yeah, but it's
so cheap, but is fundamentally, are things getting better for Uber?
Like I said before in several discussions, I don't think this one, the money matters, right? It's trading very close to, for a software company, consumer internet software company, trading at awesome valuations, but it's still, we're not, I told you in the beginning today that it's the death of, well, you weren't here at the beginning today. It's the I see the death of financial capitalism, where money's becoming so cheap that doesn't mean anything, and the rise of social capitalism, meaning today it's not about, your degree from Stanford, but it's about how many followers you have on Instagram or YouTube. That's the word on the street that I'm seeing. And if you believe me, I go on the streets, right, with the mixers and all that, right? Like I got to go out there and network and hear what Silicon Valley's talking about. It's really fun. But that's what I'm seeing. Like it's just like, think about this. If I go all the way up, right, and show you the commercial real estate group that I'm working with, right? Why are they working with me? I'm just from San Jose State, right? I'm not from Stanford, but they're asking for my help to raise $200 million. The guy on the right, Stanford graduate, knows a bunch of people, way more than me, way older, so he had all the time to build a network. So why ask for my help? Same thing, the guy in the middle, commercial real estate developer, successful track record, flies a private jet. Why do you need my help? Right? I don't have a Stanford degree, so it's definitely the network. Network is very valuable. Pay attention to that. That's my take on it. To answer your question, and when we apply that same concept to Uber, I see that Uber has the same thing as well. They've gamed the network. They have the traction, but it's just the valuations aren't showing yet. But Stanley Druckenmiller sees it. He's taking a 3% position. I wouldn't be surprised if it starts going up, he goes up to 5%. 5% of his portfolio. Earnings is on Monday, so be careful. Don't go in and buy yet. I say wait until after earnings. Let's look at the numbers. It's so close. Just wait. If it goes higher, buy higher then, right? That's okay. I'm okay with buying higher because what's the opportunity on here? This one could double, so it could go to $70. Yeah, it could go to $70. Let's see, what else? Uber, so if you measure since IPO, right, on the left box right here, down 24%, but if you measure from the high, it's down 40%, right? So the reason why I'm showing you the IPO versus the bottom or whatever is because you have to get this thinking out of your mind that every IPO you have to get in. Don't get into every IPO because it's a liquidity event for private investors like venture capitalists. That's how they exit. So let them exit like FireEye and then consider a position. FireEye, Cloudera, Yelp, whichever. So again, attractive valuations on Uber. Lyft, same story, but a lot cheaper. Lyft is down 58% since the high. So I'm thinking this is probably the oversold point. I like these two. I'm starting to like these two in a money printing environment. Lyft did come out with their earnings recently, and this is the growth that we're seeing in Lyft right here. 63% year-over-year revenue growth. That's a lot of growth right there. This is active riders, so riders are going up 28%. Revenue per active rider going up 27% year-over-year. Expenses are going down, as you can see. Right? See, it's below the line right here. So expenses are going down. That's good. Facebook. So Facebook had their earnings. Just want to update. So I see a rounded bottom, and then also holding the pink line right here, 200-day moving average. Looks attractive to me. It's like breaking out of this little cup right here. I wouldn't say it's a true cup and handle. Well, actually, maybe it is. A cup and handle needs to be assisted with an uptrend. So we do have a rounded bottom right here where I see support at 180 as well as a 200-day moving average. Above 190, this one I think could go higher, especially with money printing. Looking at the fundamentals of Facebook, right? What were their earnings results? Their revenue's growing by 29%. That's huge for a world-class entity. So I wouldn't be surprised if Palo Alto real estate or Menlo Park real estate starts going up. East Palo Alto is like a, needle in a haystack or diamond in the. And they're profitable, 19% income. Yeah, insane. Daily active users on Facebook. Something interesting I learned is that majority of the users on Facebook is actually not from the U.S. and Canada. It's majority from international, rest of the world, Asia Pacific, and Europe. Someone turn. Oh, Maggie, you got your camera on. Okay. And then monthly active users over here, if you look, that was daily active users. Now looking over the monthly, same thing. But the interesting part is actually the revenue part. Most of their money comes from advertisement, and the other smaller portion is payments and other fees, right? But the interesting part was this chart for me. Majority are international, but the majority of revenues is actually coming from USA. Isn't that interesting? Right? Higher value consumers. Right? Majority of the US population is probably not in Silicon Valley, but dollar value wise it's in Silicon Valley. Consumption wise. Yeah, very, very fascinating, right? So what does this tell me? I wrote right here. This is a fascinating chart. Even though the majority of users are international, most of the sales come from USA and Canada. Facebook is extremely bullish in that case, as they have market expansion opportunities. Major concern right now would be international government regulation, because Stanley Druckenmiller is extremely bullish on emerging markets, and they have most of the emerging markets consumers. So if emerging markets are going up in the long run, and the bulk of their audience are emerging markets, well, those portions are going to expand. So Facebook is looking very bullish in a sense. High value blue chip. It's going to be real exciting Silicon Valley real estate.
And is that the reason, because they're so strong overseas, that they really want a cryptocurrency of their own?
That's a different perspective. If you listen to his talk with Congress or whatever, there's upside. There's a lot of upside in that project, right? But it's such a sensitive topic, because if you actually listen to the highlights, they were saying that if you are going to build this Libra currency, it's sensitive because we have sovereign relationships that we're managing and all that. But then he was arguing the technology advancement you can't deny. And so I personally think the governments are outdated in a sense from a technology perspective, but tech is bleeding into everything. For us, every industry that I ever went into, tech was always my problem. Morgan Stanley, dude, robo-advisors, right? Tech was always the problem. So I realized to beat tech, you got to broker tech. Because you broker everything else, tech's going to come in and take your business. So I need to broker technology itself, become a venture capitalist, let's say. Yeah. So you can't disrupt me if I'm already brokering the disruptive and innovative. Yeah. Hey, thanks for coming, man. Appreciate it. Sorry if I took so long, but hope you enjoyed it. Thank you, man. We'll be done in 5 minutes here. So we're 10 minutes past. I do apologize, guys. Let's speed up a little bit. FireEye. They already had earnings. I'm increasing my position here. This is something I'm looking to get heavy. I think it's becoming quite the attractive acquisition target. It's beaten down, and I think something like Cisco could probably buy it. There's a good chance. They're not growing at the rate that I'd like, 7% revenue, but they're doing a lot. I think they're doing about $900 million in annual revenue. So 7% year over year change. Billings, right? So new logos over here. These are the new logos in Q3, 276, and then logos that are $1 million over in transactions. So 37 $1 million contracts, right? You could say I have 200 customers, but the question is how many of them are $1 billion contracts, $100 million contracts? Oh, none of them are. Just kidding. So I think they're quite diverse from a contract perspective, right? It looks like they have a good chunk of big ones as well as a lot of smaller ones. But if you look over here by revenue category, this is their product portfolio is quite diversified as well. They got 3 products: products and related subscription support, platform cloud subscription and managed services, and then this professional services right here, like installation, I'm guessing. So they have a diversified product portfolio, but they're also geographically diversified: USA, EMEA, Asia Pacific, and other. Right. So when I'm analyzing the quality of revenue, I want to see, okay, is it geographically diversified versus it's all concentrated in Silicon Valley, or it's all concentrated in this one account. Like Arista Networks, it doesn't look that good because it shows that revenue is lumpy, meaning in a period of a year, it's like you're waiting for that 1 month for that big payday. So 11 months out of 12, you're hurting. Cloudera. So Cloudera, I continue to watch, is sort of a boring trade because it's not really doing much, but I'm just happy that it's holding above the $8. Again, Carl Icahn has a position in this. Relatively undervalued SaaS security, high margins, world-class venture capitals are backing this company. I still like it at this price. Mobile Iron. So this one's an ouch for me. Took a little hit right here. Again, starter position, so not too worried. Very aware of the risk going into this one as it's smaller cap. This is not the typical market cap I play. So this one gapped down quite a bit, but my logic behind this is that it's trading at a $600 million market cap, and it's at risk of acquisition. So I figured the logic for me was I have to take a position because there's a chance of this getting acquired because it's a quality company. So what I say, we'll lick my wounds and go on to the next trade. That's usually how it works, right? The earnings were.
So you're not going to double down on it?
I mean, so usually when it sharply drops like that, like a knife, I let the knife, the knife is still like this. I let the knife lay down a little bit before I get in. So yeah.
What's a big drop? What caused bad earnings or something? The big drop.
Yeah. Well, the earnings were okay, 6%. I haven't done deep analysis on that. It's not a significant position for me. You're eating popcorn, right? It smells like popcorn in here. Unless it's not popcorn, then I'd be like, oh man, I've been like walking around. And, okay. Fortnite. No, Fortnite. I don't play Fortnite. Fortnite. This has been one of my long-time favorites. I've been watching it for a long time. I think it's time for me to consider a position. This is a world-class software company that's profitable. I've been like kind of just watching it because it's been too choppy. But I know that if it were to go lower, I would really, really, really consider this. So
they're expanding, they're building like a building and something.
yeah. Whenever you see a profitable software company, it's just like you gotta just consider it because those are what we know about software. They're high margin businesses. The moment they get profitable, they start making big money. So yeah, software is where the game's at least in my eyes. Biotech's there too. We're going to skip a little bit. On earnings, 21% revenue growth, okay? Margin expansion of 450 basis points. Income per share, they are profitable. And then free cash flow increased 45.2 million year over year. So very, very powerful company. Activision. So this one I've been eyeing still. Check this out. Very, very strong rounded bottom right here from a technical analysis perspective. Not a cup and handle because it's not assisted by an uptrend, I'd say. But I think it's found its market price right here, or support. So $50 to $40 is where it won't, this is the floor. This is how I identify a floor. So right now the charts look very bullish. It looks like it wants to go up. It looks bullish on the daily, this is the daily chart, and it also looks very bullish on the weekly chart. So this is one of those blue chips. So if you're going to invest for a long run, this is a quality one in my opinion. Educational opinion only. Because I see Morris writing down. I don't want you to hold grudges. Like, oh, this cave made me lose my money, blah, blah, blah.
Again?
Palo Alto Networks. This is a gold standard in Silicon Valley. So much of a gold standard that it's, their website is paloaltonetworks.com. I bought paloaltoguy.com.
Really?
Yeah, I own that domain. I also own sandhillguy.com because I'm going to start tackling Palo Alto very hard next year in 2020. It's part of part of my goal, ambition for next year. Because if that's like the center of the technology world, well, hey, it helps to have paloaltoguy.com as your verbal business card. I'll still go by the Enterprise Guy, but that's more like digital audience, right? Palo Alto's more for Palo Alto. So these VCs I'm going to try and get their attention. Just got to make some noise, that's all. So Palo Alto to me looks good. It's a gold standard. Break of that red down trend line as you can see, and then also a breakout at the blue line. This is one of those where, it's cheap. It's relatively cheap. Maybe consider it. I like it. Reversal work is in place. This one continues to be gold standard in my opinion. Okay. VMware, some upside trade here. Again, break of the down trend line, and this is one of my favorites too. VMware is one of those that I could see going to, let's see, how much? And it's here in Silicon Valley. Again, human capital is world class. 64 billion. This could easily go $300, easily. This is why I like it. Software company, profitable, thick margins, oh my God. Debt's okay, a little high, but it's world class. Sales in the $8-9 billion. Yeah, this is calls on this one for sure.
What's on the Palo Alto Networks? How far do you think it can go?
Palo Alto Networks could go 10x. Yeah, I know, 10x. 10x would be 2,300. I'm not even kidding. 10x in 10 years. 5x in 5 years. Yeah, this is a super bullish one. Looking at the monthly chart, yeah, very super bullish, man. I just wish I had more money now to like. That's all. Like, that's why I feel like okay, let's just go fundraise and invest people's money for them. Well, I'm fundraising now, but I'm gonna help these guys who have more of a track record to invest in commercial real estate. But if I prove myself as a successful fundraiser among the high net worth circle, then down the road when I'm more mature, like 35, 40, then I'll probably start a fund. But for now, I want to hone my skills and just get really good at this.
What makes you so bullish on Palo Alto?
It's a Gartner leader. Margins are thick, price relatively low. This is the sweetheart baby of the VC world. You want to see if I go to Crunchbase and look at Palo Alto Networks, this is Ashim Chandna's baby as well. For those of you who don't know, Ashim Chandna is the VC I met in Atherton at his house. Thanks to one of the person in this investment club to introducing me. Looking at the VCs, right? Icon Ventures, Greylock, Sequoia Capital. Yeah. So high quality VCs. It's just getting started right here. I can't remember I know it's cybersecurity of like probably IoT things. I need to look at it again. There's so many software companies. I need to look at what the business models are. Looking at DocuSign. So this one's at all-time highs, something to consider. This one's looking very bullish. It's just, this one's running away. DocuSign, I use it personally. I think it's a great company. And let's look at the valuations. It's sort of overvalued, right? 14, 20 times price to sales and price to book. But the thing here is that it IPO'd, it double bottomed at the IPO price, and now it's going to new highs. So this is experiencing a lot of bullish indication. It's good for a trade, but be very careful as it's slightly overvalued. That's my comment on it. But it looks like it's going to go higher. Usually when I see something like this, I think this could go to 100. So as long as the printing money environment continues, this is looking good. Microsoft, this is just like hand over fist, like it's just going up because best company in the world, not Apple in my opinion, this is the best company in the world. It used to be number one, not number one anymore. Money printing will just make the best company in the world go higher. I'm biased to say best, I guess. I really like their leadership, business model, product, services, everything.
Plus the base is so wide, right?
The what?
The base.
Yeah, the base is very wide. Like there's a lot of battle.
The base, the higher the energy.
Yep. Yeah, exactly. It's like physics, right? All this energy is built up right here. So I think this one could probably even go to 175, 200.
I think Microsoft's going to be most stocks. It's going to be pretty high.
Yeah, Microsoft's going to be awesome. BlackBerry. I like this one still. Valuations are even cheaper, relatively cheaper. What can I say? World-class management, John Chen, large SaaS market. I'm still watching it. I still have positions. Cybersecurity plus AI equals 2 buzzwords in the markets in one stock. So I like those. Miners, guys. I'm going to keep this short because it's getting a little long here. Agnico Eagle, still in position right here. This one's great. This is probably my number 1 favorite for gold miners. Number 1, number 2. This is my number 1 and number 2 as well, KL. So I'm looking at upside right here. I think gold miners are picking up again, so pay attention. BTG by B2 Gold, one of my favorites as well. Also Axel Merck's favorite. This one has substantial upside. I like this one. AGI, I know this one's been doing poorly, but I'm back in, I'm adding even more because this is trading at 0.8 book value. I really like this one. Newmont, my GG shares. This used to be Gold Corp, but the stock got acquired in November, December. So now I own this one, so I like this one as well. Franco-Nevada, this one's starting to look very good. It's both gold and silver. I know, some miners are like a mix of both, if I recall. And then Silver Miner, this one I really like, Pass. This is the hedge fund manager's favorite right now. Everyone's favorite, Pass. Because the CEO has a very strong track record, everything. So this one's starting to look bullish. You see that break of the trend line right there? It's the initial start. Ego's starting to look good. I know you invested into Ego when you met me back in June.
Yeah.
Damn.
Yeah, thanks for that.
So you want? When we're gonna have dinner? No, you're welcome. This is awesome. It was massively under book value. I think it still is at 0.4. That's insane. 0.4 book value. Let me try to remember all these numbers. 0.4 book value. That's insane. Yeah, so that's Ego right there.
Look at SAND, SAND.
Is that another gold miner?
Yeah.
Ooh, look at that. price to book 2 times. Canada, 1 billion sales about this. I just need to know how many ounces they're doing a year. Yeah, this is looking good from a technical perspective. It looks very good from a technical perspective. I mean, in general, just looking at the segment, the miner segment, right? It looks really good right now. So.
Is that Northern Star Resources? Oh, I think it's Australian. Do you invest internationally?
No, I don't. I don't have those. I don't have the data feed on that. And then other plays I'm looking at, because money printing good for oil or commodity prices, I'm looking at midstream. There's upstream, midstream, and downstream. Upstream is like production, exploration. Midstream is more like services. Downstream is like end users. So I'm looking at midstream because a lot of credible investors are eyeing the midstream. So this is an ETF that focuses all on midstream, and I think it bottomed probably right here. So this is a long term right here for me. Emerging markets, FXI, so a way to get exposure is one of the hedge fund managers' favorite. And then the last 3 that we're still in position, AT&T, one of the greatest trades for me right here, because we were looking at this back in like May or something. But the beauty is that I was paying 7 to 8% dividends in this market, 7 to 8% dividends. It's not too late. So that's AT&T, and my Russian favorite, I'm still in position, 10% dividend. But I think I locked in like 11 to 12, probably, which is pretty nice. And this is emerging markets too. So think about it. Russia security. Russia is buying a lot of gold. It's emerging markets. I'm bullish on gold. I'm bullish on emerging markets. I got 10% dividend. This is like a stock that's like paying out like pretty well. Like it's like some nice leverage. But speaking of leverage, it has 14x leverage. So be careful. The reason why this one looks attractive is it's the Russian blue chip telecom, communications telecom. It's the biggest in Russia. And then this one, also a very good one. This is a REIT, 7% dividend. I think we locked in 8 to 9%. But yeah, it's going even higher now.
Do you look at face value yield? Because dividend also grows. You could have a company with a low dividend yield currently.
Yeah.
But if the earnings are growing,
yeah.
that dividend.
Yeah, I just try to remember where I locked in. That's all. And with that being said, guys, this is lecture number 138. That's all I got. Yeah. Hey, no, you're welcome. I guess you guys like this one, huh? Let's stop the recording and